everyone. Welcome to another Spaces with me, Kalu Aja. We do this every Saturday. We talk about money, the economy, and of course, personal finance and investment. We want to talk about money, but we want to talk about it, how it affects you personally, right? And every time, I do all the talking, we have guests over and we talk. So let's have a week where we hear from you, right? Let's hear from you how your 2022 went. And what you were able to say achieve financially. What were your plans? What were your goals? What stopped you? Was inflation really a big thing for you? And how did you get around it, right? So I had brought a guest here, but when Spaces had canceled, Twitter had canceled Spaces. So we had rescheduled, but they brought it back. So my guest really can come back. But I'm here, and we can have a good time talking and listening to you folks. The way I wanted to run is if you have a question, right, you can ask, and then we'll all try to learn together. Just to caveat and put all the disclaimers, right? I'm not holding myself out as a financial advisor on the Spaces. I'm not your advisor. We're not giving investment advice, nor are we offering you anything to buy or sell. This is all educational. We are simply sharing opinions, and you should always consult your financial advisor before you make any investment. Stocks have the ability to lose money, and past returns are not a guarantee of future returns, right? So, with all that disclaimer done, if you want to hop in right in and speak, I will let you do that. I'm going to share a few slides as well and just talk about a few slides also on this space. So, if you want to do that, you are perfectly okay to just request to speak and I'll let you speak. But let me just give you an overview, right, of what has happened in 2022. And I'm going to start from 2021, right, from 2021. When we were going into 2022, 2021 was a year of very low interest rates. The dollar interest rate was very low. The Nigerian stock market was doing pretty well. I don't know if you guys know, but in 2020, right, the Nigerian stock market was the number one stock market in the entire world, right? And that was based on the back of the Dangote share buyback. So if you are invested in the Nigerian stock market, you are getting the best returns really on earth, right? Same thing with the Naira. It wasn't that bad as it is now. And inflation was not as bad as it is right now. So we're pretty optimistic. We're coming out of COVID and there was going to be a lot of spending and we're going to reap that spending. But guys, 2022 brought the Ukraine war. And what that war brought was the uncertainty and the inflation. And you've seen the US interest rates go up. That has changed the entire picture. No one saw that Ukraine war. No one even saw COVID, right? So the point I want to make is this. When you are planning, you really don't know what's going to happen. We can all plan and say we want to do this and want to do that. But in 2023, no one knows what's going to happen. So how should you approach if you're investing in 2023? You have to do what I call objective-based investing, which means you want to ask yourself, what is my objective? Why am I putting money away? You've got to save. And when we say save, people always argue, oh, you have to save or you have to invest. Let me explain what the difference to you. If you earn money and you don't spend it, you've saved it. Once you don't spend your income, you have saved your income, right? But there's no thought process towards saving. If you give a child 100 naira and the child does not spend that money, the child has saved. The difference with investing is that investing is planned. You have an objective in mind. You know what you want to do. So when you save, that means you haven't spent, right? You have to save first, then you invest the surplus. When you invest, you say, hey, I have a target. I want to hit this. And this is why I'm investing. I'm investing because I want to have built a house. I want to retire. When you do that statement, that is the most important thing in your investment journey. Once you get your statement right, i.e. your goals, then you can do what's called an asset allocation, which means that you buy assets or you invest to meet your objective that you have stated. So I'll give you an example. If I'm a 25-year-old Nigerian, right, and I'm going to retire when I'm 65, so I have almost 40 years to invest. That's my objective. And my objective is say I want to invest to retire. So my objective is to retire 40 years. The sort of investment I will buy is going to be very heavy in equities. So I'm going to buy lots of equities. I'm going to invest in the stock market. I'm going to invest in all those quote unquote riskier assets. Because at that age, I'm in what I call the accumulation stage, and I want to grow my assets. Possibly my income is lower. When I start to work, I'm going to earn lower as I'm 25 than when I am going to be, say, 50 years old, right? So at that young age, I don't have enough income. It's possible I'm going to buy a lot of my assets by borrowing. So I want to basically accumulate assets. If I'm borrowing money, I'm buying assets. If I'm saving, I'm investing in long-term equity-based assets. What is equity? Ownership. That means in Nigeria, for instance, I'm investing in the companies that are creating products and services. And I give you an example, just an example, guys. I'm not recommending you go buy this, just an example. If I'm buying Dangote cement, right, I'm investing in the profits and the losses of Dangote. If Dangote supplies cement and the cement is used to build roads and infrastructure, then I am a partner in Dangote's success story, the Dangote cement success story. So I'm buying into that equity. If it goes up, I rise with it. If it falls down, I fall with it. But I want to do that if I have a 40-year or 30-year or 20-year horizon, because I have a longer time to invest and I can absorb volatility. What's volatility? That risk. We don't know what's going to happen. So if I invest in equities, it's going to be for a longer period because I can absorb the risk and my objective is long term. Why shares? Because over the long period, equities, right, have been seen to tend to beat inflation. Inflation is the problem. So inflation is the devil, right? If there was no inflation, we will simply take our income, bury it in the ground, then when we retire, we take out that income and we spend. But because there's inflation, guys, it reduces the purchasing power. So if you earn ₦1 million in 2022, that 1 million will not be worth a million in 2060. That's why we're investing, right? So different objectives, different asset classes. If I was a 50-year-old Nigerian about to retire in 2 years' time, then I would not put a lot of my money in shares. Why? Because I'm about to retire and I need a lot of fixed income. So when I retire, I don't have the ability. Let's say I'm 65, I don't want to work again. I don't have the ability to go to work and start to hustle again. So whatever I have made, I want to put it in something that is more stable that will then pay me a return. Now you see, these are two different people, the 25-year-old and the 65-year-old. They are both different. They have different objectives. Hence, they invest differently to hit a different objective. Shares are not better than bonds, and bonds are not better than shares. The difference is your objective. Hence, the most important thing to do when you're investing is to get your objective correct. Why are you investing in 2023? Once you answer that question, then it's easy to walk back and say, okay, if you want to invest to beat inflation, do this. If you want to invest to retire, do this. If you want to invest because you want to grow your principal, right? You want to trade and expose your principal to risk, then do this. So guys, the word is that investment-based, objective-based investing. You want to invest with an objective in mind, not to make returns. Get it right. If you want to invest in the market and you chase returns simply, you are not doing it the right way. If you want to if you are in Lagos and you want to take bags of rice, 20 bags of rice to Kano, you are not going to buy a coupe. You're not going to buy a small sports car to go to Kano with 20 bags of rice. Rather, you're going to get a truck. So the truck isn't better than the coupe, the sports car. The truck is simply what you need to go to Kano with 20 bags of rice. The same thing, if you're going to go on a date down the road with your girlfriend or your boyfriend, right? You need a sports car. So you're just going to go here to there with your date. You go on a sports car, you go have dinner, you come back. You're not going to take a truck to your date. It's too big, it's too cumbersome. You need a small, sleek, beautiful sports car. You go in and you come out, right? That's the whole idea. Your objective determines what you buy. There's no best investing. There's no best share. There's no what should I buy. Rather, you should ask, what is my objective? This is what I want to do. This is the amount of risk I want to take, right? Then you then say, how can I achieve that objective? That's the opening, guys. So the floor is open. I just want to make you guys understand that. I hear people all the time, what should I buy? Don't ask what should you buy. Rather, try to work with an advisor to say, what should I be doing? What's going to happen in 2023? And what should I do? And so if you want to speak now, just request. But the main thing to know in 2023 is that the US is looking like it might go into a recession. Everyone is saying I'm going to go into recession. The problem is, how long will that recession be? If Is it going to be a short recession or a long recession? If it's a long one, then we're going to be in trouble, right? If we're in Nigeria. Why? Because markets sort of reduce, right? If China, second largest market, US, largest market, if they go into a recession, what it means for you is that you export less oil. If you export less oil, your country gets less money. If your country gets less money, you get less dollars in your foreign reserves. If you get less dollars in your foreign reserves, then you have the ability to, you can't defend your naira, and possibly you then have to borrow to meet up that gap, which then might lead to inflation down the line. The big story in Nigeria is the elections, because the elections will drive the policies that you will see in 2023. So that's for Nigeria, that's a big issue. Whoever wins is going to have a different economic policy, and that's going to be your number one thing you want to watch out for. All right, let's go to the floor real quick. I've got Mike Powers. Mike, how are you doing today?
Hi, Carlo. I'm good.
Great. What's your vibe, bro?
Yeah, it's actually it's a pleasure listening to you. I've actually gotten a whole lot of this investment, the updates from your end, the journalist. So thank you very much. Anyway, my number one priority for putting my money where my mouth will be in 2023 will be developing my 3 mining sites. I just got the license, the exploration license for the sites from the FG here. I have gold there. We have quartz, we have iron ore, we have feldspar. So I hope we will discover more anyway. Also, I will be putting my money there to look at who can come for partnership, and I can actually develop. First, start with the quartz, the quartz sites.
All right,
so that would be my number one.
So you're
I'm a defense guy, but I had to diversify my portfolio as well.
Okay, so you're looking at investing in Nigeria in the solid minerals, non-oil sector. That's what you're basically going to do in 2023.
Yeah.
Exactly. I mean, I like it because there's going to be in 2023, whoever is the president is going to focus on non-oil. Currently in Nigeria, the non-oil sector is what's driving growth, not just the growth, but also the revenues. Nigeria is making no revenues from crude oil. All the revenues we make either is not coming to the CBN, or it comes and we use it to pay the subsidy. So all the dollars you see in Nigeria today are from non-oil. The non-oil revenues are going to pay subsidy. So if you are in solid minerals, you're in agriculture, you are in services, you are in trade, that's your money that we're using to survive, quote unquote, right now. So it's a solid place to be. It's a solid sector to go into. If you can understand the government's plans, you can get your investors, get your long-term funding. Solid sector to be in. So I wish you the very best. But in terms of personal side of it, apart from what are you doing different? What habits are you going to change out? Are you going to have a budget? How are you fighting inflation? I want to hear about the personal side as well.
Okay, for the personal side, I think I was able to cut down, the cost of running my office, as well as running the house. We just got the essentials. Make sure we pay for just pay for the basic services and the things we need, and cut cost of going to places that really don't really, or the big items on the big ticket items. Obviously, I just basically strip them off. I'm not changing my TV. I'm using the LG C1 series. It's still sharp. It's still good. I'm not going for the C2. I'll still be using this one. I know I bought it for 1.5 million here, so it's still very good. I'm not going to be changing the car.
So in essence, you're not going to spend a lot of money.
Yeah.
You're not going to spend a lot of.
A whole lot, basically. You're keeping the dollar tight. Yeah.
All right, great. So you're not going to spend a lot of money in 2023, right? And this is the problem, right? Because if everyone doesn't spend, then the economy does not grow. Many people are going to watch.
I mean this year. This 2022.
Excellent. Okay, so guys, if you look at the Twitter timeline,
so 2023 will be when I need to spend this money, because I didn't really know that the economy work like a machine.
Yeah. So, Mike, let me stop. If you want to invest, guys, a good plan for you to have for 2023 is to try to look at the budget and try to ask yourself, where will the government of Nigeria spend money? If you know where the government of Nigeria is going to spend money, then you try to get in there. Where do you think, whoever is the president, what sectors do you think they're going to spend money on? Number one, they're going to spend money on infrastructure. Whoever the president is, they're going to spend money on infrastructure. Yeah. So anyone you see that is doing maybe cement, that is doing iron rod, that is doing construction, right? You want to look at those guys, right? Construction. Number two, they're going to spend money on agriculture. They're going to spend fertilizer. They're going to do NPK, all that stuff to do with fertilizers, value chain, processing, all that's going to happen as well. So anyone you see doing construction, doing agriculture, that's where you also want to try to do 2023 as well. What about telecom? We have the new cashless banking policy. We have telcos now have banking license, which means they can receive deposits. Just say they have payment license, right? So that those telcos are going to grow into a very large market, right? So I see a lot of growth also in that sector of the cashless banking, fintechs, POS. That's also going to be a big sector in the economy. So construction, agriculture, services. This is where they're going to spend money. So if you're trying to invest money, you want to ride with the government, because if the government spends money, it creates growth. Mr. Wright, I'm going to let you speak very soon. Guys, I just shared a tweet, right? If you look at the tweet on the timeline, you'll see where I have shared, right? The growth, if you invested, for instance, and this is the US market, right? I don't have really the Nigerian market, but the US market, if you invested, see the sum of $1 from 1926. So you invested a sum of $1 from 1926, right? And we go up to 2021. What will that dollar have returned for you? Using past returns. To make the point about objective-based investing here for you, right? So if you had put in $1 in 1926, and you had bought shares, you had bought bonds, you had just kept the cash, what would you have achieved? And the infographic is on the timeline of the spaces. If you had done shares, you would have about $14,000 from 1926 all to 2021. So shares, because you are compounding, you are riding the growing economy of the nation, would have given you a higher return of about 40%, right? What about bonds? So bonds means you are lending money, you are giving some money to invest, and it's going to owe you. If you had invested in bonds in America, you would have gotten just $288 from 1926, $288. And if you had held your cash, you've gotten only $21. This sort of return, where you see equities doing well for the long term, if you look at Nigeria, it gives you almost the similar pattern. Over a long period, equities tend to outperform other asset classes because of this issue of the compound of dividends, and they are walking into the growth of the economy. Not all equities in all countries do this, but equities over time, all things being equal, are able to beat inflation in most economies. This is why we say longer term, let me tell you, hey, consider equities longer term, right? And I've just shared that infographic, so if you want to grab it, that's going to be a good talking point for you. Mr. Wright, how are you doing? Dr. Kabir Ali, how are you doing? Go ahead, sir.
Good evening, sir. I'm doing all right.
Excellent. What's on your mind?
Thank you very much. Now, my contribution is, although you say that we should not ask a lot of questions, but I'm sorry, I have to do this.
No, you should ask questions. I want you to ask questions. Sorry.
Okay, because I heard you saying that we should not ask what to do, what to buy. Right. Okay. My question is, I've been trying to venture into exportation since 2 years ago. I have actually export to I really cool. We were all kind of so engaged here, and you couldn't help me. And of course, I made my research here in Nigeria, but I've not been able to make any decisive inroad over the years. So I'm wondering if someone has any kind of like contribution or information that's really helpful in this kind of venture, please.
Yeah. So if you want to go into export, that's another area I think is going to be perfect. Why? Because you can make foreign reserves. So if you make foreign currency earnings, that's going to be key for you in an economy where we are not sure of the direction of the dollar. So anyone earning dollars in 2023 is on the right path. So that's the first thing. So we're on the right path. that you want to explore exportation. What I'll say is
Yes.
this, right? The first place you want to go, there's a commission in Nigeria called the Nigerian Export Promotion Council. Before you do anything, go there. They are also on Twitter, Nigerian Export Promotion Council. Go there and register as an exporter. You have to register first of all so that you're on the database, and they have a ton of resources. If you can search for me, say Kalu Aja Export Nairametrics, I wrote 3 articles on export where I put a lot of things. The way the NEPC has built their website, if you know what to export, let's say like you want to export, say, soybeans, right? You can find out which countries in the world you can export your soybeans to that are looking for soybeans. So you can say, oh, you can go to their site and you can say soybeans are needed in Vietnam or in China. It will tell you that they go, okay, if I want to export soybeans, I have to go to Vietnam or China. It will now give you a directory on that same website of who in China, right, with particular company or with particular person is a big soybeans purchaser. So you can then go there, get tested, it'll show you where you can get your soybeans tested for export, right? Because you want to send a sample and all that. So it will also tell you, if you don't know where to export to, if you don't know what to export, you can also go to the site and find out what commodities or what products are needed in what particular country. So you can go to the UK and they'll tell you what UK wants to import. You can go to America or Canada, it will tell you the exact same thing. This country needs this, or this country needs this. So there are many ways to do your research. You can either know you have the product and want to export it, or you can find out from the country where you live in, where you have a contact and say, hey, this country needs this, and I want to export and I want to get that. You can get that information there. It's a lot of research. I would say for exports, right? The research is 99% before you even do one thing. It's funding, it's understanding the market, it's understanding how you are paid. Are you doing CIF? Are you doing cash? Are you doing X? Are you just giving the reports and they pay? So you have to do a lot of reading, and that's what I do in those 3 articles. Just Google my name, exports, Nairametrics. They will come up. They've got tons of links, and I did it step by step. So I tell you the first thing you want to do is this, and the next thing's right. And also on that article, I'll tell you how you can do a template to know if that export you are going to is going to be profitable, right? So if you want to export again, say cashew nut, it will ask you how much is the farm gate price of cashew nut? Where is the price you're going to export it to? What about your cost of insurance, your cost of bank loan? You can actually do that calculation and see if it is something that you want to go into. I would not advise you doing any exports unless you have understudied someone or basically invested in someone that's doing exports so that you understand it first. Because you might have the best product and you might pack it wrong and it gets rejected. So I wouldn't borrow to do any exports, and I would not export on my own without either understanding the whole process or even going to invest in someone that can export, then letting them guide me and I can learn essentially from you. So for one thing, I'll say go and do tons of research. If you don't have those articles, send me a DM, I'll send them to you. But please just look at my name and make sure you get it. Look for someone who is exporting and try to understand it. Either you invest through him or
Okay, thank you very much.
very, very good if you do that. Don't invest without getting that background knowledge first, right?
Okay, can you remember the article, please?
Just say Kalu. My name is Kalu Aja. Just say export. And I publish it on Nairametrics. So if you just say Kalu Aja, if you just say Kalu Aja export Nairametrics, and they all have the links I'm talking about. It's going to give you step by step how you do your research, how you register, then how you basically do your funding. Everything is there. Lots of pictures, lots of links. So it's like you get those articles, perfect. You can do your background study before you then go out and say, okay, let's go raise wood and all that. Also on this, we've brought an exporter here in the past. We talked to him. You can also search on the Spaces library where we talked about exports. Yes, you will also see some very, very good. There's a guy we bring in here, Mr. Emmanuel. He's an exporter. Also, so to spaces, that would help. But good call. If you want to do exports, I like it. Yeah, go get it. Yeah.
Thank you very much.
Thank you, Mr. Wright. All right, K-Som. Hey, K-Som Stein, what's going on, man? How you doing?
Good evening.
How are you?
How's everyone?
Everyone looks good. Everyone looks happy and good. How are you doing?
I'm fine. I'm fine.
What's on your mind?
A follow of you. Sorry, someone a call came in now, but I dismissed it. I've been a follower of you for a while, so I just have a few questions, and it's something they might seem okay. The ones I ask today will seem very naive. Please just answer them
No
for me.
question is naive. No question is naive. Go ahead.
Okay, so I listened to you talk earlier on looking at the potential candidates and what they look to achieve going into 2023. So a lot of my tips on it will be, I'll be honest. So now, and I'm sure that when it goes in, I've told my friends that I see him is going to do because he's looking at he's going to create the enabling environment. Let's say even the running costs for a lot of things will drop when electricity, like let's say balances drop a little bit, businesses can run better. So now I have an idea, but now I need to understand. I called my friend. He wasn't giving me a straight answer. When for exchanges, there was something he talked about creating one FX system in Nigeria, like the total elimination of black market. So, if I'm correct, that's what Nigeria is creating two systems of foreign exchange, like black market and CBN. I don't know. I did study economics. So, if we are to run one system, how are the remittances going to happen? Like, if someone sends you money from, let's say, your uncle sends you money from the US and it comes into Nigeria, for you to get the money, will it be converted to dollars? Does it will something like that kill domiciliary accounts in Nigeria, like end them totally, or will it still be a thing? And do people living in the UK, do they have domiciliary accounts? Like someone from the US is receiving to the UK. Do they have domiciliary accounts for all these things? I want to just know.
Okay, so great. I understand your question. I mean, you're asking a lot of questions in one. I get it. Let me see. I got you. Good question. Let me see if I can simplify everything, right? So every country has a currency. Every country has a currency. You have naira. I have dollars. Let's understand what the dollar is. The dollar is what you use to trade. If I am in Nigeria and I want to export cocoa to Japan, right? That means that a Japanese guy wants to buy cocoa from Nigeria. He needs naira. I want to buy a Honda car from Japan. I need yen. The way international trade works, I don't use yen. He does not use naira. What we both use is the US dollar. So we would use the US dollar. I would use the US dollar and trade with the Japanese guy. So the first thing to understand is that the US dollar is how we settle trades between two nations. And we use the US dollar to settle. What that means is this: if I want to buy crude oil, I need dollars. I don't need naira. I need US dollars. Hence, the way you get US dollars is number one, you do exports. If you export, you get crude oil. You get dollars, sorry. Number two, you can do investments. So folks can come and buy your bonds. You can do a naira bond in your local currency, and folks can bring dollars into your country and buy those bonds. Then you get dollars. And number three, for a country like Nigeria, you can do remittances, which means that the foreigners, the Nigerians living abroad, can remit dollars back to Nigeria. So let's say for Nigeria, we have those three sources. We export crude oil, and we have investment. We buy Nigerian bonds with naira, but they give us dollars, right? Like foreign portfolio investments. And the last one is remittances. Remittances in Nigeria is a very, very big thing. We get about $25 billion officially via remittances. It's almost as much we get from crude oil, which is a very, very big thing, right? So what is going on is that when those dollars come to Nigeria, they are supposed to go to the central bank. So the central bank in Nigeria is the one that receives the dollars. Then if you want to import, the central bank will pay your imports. So understand what's going on. If you have your own dollars and you put your own dollars in your domiciliary account and you want to pay for import, it is the central bank that will pay your exporter, not you. It's your money, but the central bank pays. So the central bank wants people to put money in their vaults. The problem in Nigeria is this: the central bank wants to buy your dollars right at 4.66, but if you go outside the central bank, you can sell it at 7.50. So there's a big gap between the official rate, which is about say 500, and the unofficial rate is about say 700. So because of that, nobody is sending money to the Central Bank of Nigeria. So the Central Bank of Nigeria has no dollars. Does you see them owning airlines because they can't pay the airlines, they have no dollars. So you then have those two rates where you can go to the central bank and get a cheaper rate, which is subsidized, or you go to the black market and get a rate that is not subsidized, but you get it. So central bank you delay, but it's cheaper, but black market you can get it, but it's expensive. So how do we fix this? The way you fix it is to always follow the market. The market is always correct. So what the market is telling Nigerians is that the real exchange for the naira is the 700, not the 500, i.e. that the black market rate is the real price of the naira. That's what the market is saying. The central bank can say, no, I disagree. The real price is not the 7, it's the 5. If it says that, then it has to supply the market dollars at 500. But to supply the dollars, it has to take from its foreign reserves and do that, which it's not going to do, because if it spends all its foreign reserves, it can no longer have dollars to import. So when you see the candidates saying they want to eliminate the multiple rates, what they are saying in other terms to you is that they are going to devalue. Devalue means that that central bank figure of 500, they will take it nearer to the black market rate of 700. So that if it is nearer to that, then more dollars will come from those importers and the remittance people back to the central bank and not to the black market. Right now, the central bank is competing with the black market for dollars. That's why they don't have dollars. They are competing, they are fighting for dollars. So if I have $100, if I give it to the black market, I get more. If I give the central banks, I get less. So central bank is saying, oh, we'll give you incentives, we'll pay you. That's what they are doing, right? So the central bank can raise how much they will buy the dollar from this 4.66 to say 600. That's what's called a devaluation. They do that, they get more dollars. But of course, you know what devaluation means? It means that officially your currency has lost value. So you might get other bad effects with that, right? That's what's going on. So when they say they want to make it one currency, DOM account is not affected. But DOM account will then be able to sell to the bank, because DOM account holder will say, oh, I've made a profit at 600, I can sell. Other countries don't have a DOM account because other countries don't fix their currency. The US government does not fix the exchange rate of the dollar to the euros. They don't fix it. Because they don't fix it, they don't need a reserve to maintain that peg. If you want to buy dollars, you just go online, you go to the currency market, and you can just buy the dollars. You don't have to go to the Central Bank of America, the Fed, to buy dollars. So, have I helped you out a bit?
Yes. You've helped me out very well.
Okay. So when they make the dollar rate equal, what will happen is this: that the naira will go up to 4,600, right? But it will stop import to make imports expensive. So it will use the import to make local products more attractive. So I went to a store in Abuja. They were selling sparkling water from France. Nigeria shouldn't be importing sparkling water from France. It's a waste of foreign currency. So if you make import expensive, you don't see sparkling water from France, you might see sparkling water from Ogun State. So you conserve your currency. That's the whole idea. It's a bit more technical, but if you say, oh, okay, that's fine, I'll let you go. I'm going to take Juliet call. Hey, Juliet, how you doing?
Good afternoon, good morning, good evening, everyone.
Right.
Yes, thank you for the opportunity. I think I want to weigh in on what you said, and in answering, I can't pronounce his name. Yes, question.
So it's Kaisum.
Kaisum. Okay. So talking about the remittance part. So just yesterday, or for a while, I've been thinking about how to send money to Nigeria, and of course to get the best medium possible, so I don't have to pay a lot of charge and all of those things. And just by talking to a lot of people, and then say, "Oh, why don't you download this app?" Not advertising app. So I just downloaded the app, and then I tried it. So I was going to send pounds. But it said, okay, if you're going to send to Nigeria, it's going to be converted to the dollar. And the good thing about the app now is you just have to put the NUBAN of the person's domiciliary account you want to send to in Nigeria. So it goes directly. And then I told another friend of mine, and then, I want to send money to my own account. But he didn't have an account. And immediately on the app, he transferred from, I think it was a Revolut or something, I don't know what it was. GT automatically created a DOM account for this person. So the money, the dollar or whatever he said, is in GT Bank with the new domiciliary account holder.
So just repeat, they're saying that if I'm in the US, I can send money from the US to Nigeria and they give the person the dollar.
Yes. Like I have the app right now. I did it yesterday night. So I'm just waiting for my sister to send me her NUBAN. So I was like, okay. Go and ask GT Bank what your NUBAN is, and then give me, and then I will continue. But yes, it's possible. It lists out all the banks.
What's the name of the app?
Remitly.
I know.
REMITLY.
REMITLY. Okay. I mean, all do your due diligence. Check it out, guys. If you like it. I also know there's an app I do use, Kayoshi. Kayoshi also gives you. They give you the rate. I think this is the rate you get is the same rate as you would get because you barter. Like you find someone that needs the dollars in Nigeria, right? So then you say, hey, I want dollars at this that I can send to you. Just like how I do with my friend. So they also do that. But I think the key point, like you said, is find out your best bet. Yeah, do your research, the best you can get dollars. It's really a question of if I'm in Nigeria and I live in America, right? And I have $100,000. If I go to my bank, they're not going to give me 1% return. I will not get 1% return. But if I put that money in Nigeria, all these banks have got this Eurobond money market fund that they do. I think FCMB has one. We talked about FCMB a lot here. They have this FCMB money market where you are investing in dollars in Nigeria to buy a Eurobond. Those boys are paying 4-5%. 4-5% in dollars. So if I was able to bring,
do you mean 4-5% annually?
Yes, 4-5% annually in dollars. Money market fund. They are investing in the Eurobond. Eurobonds yield on the market is about 8%. That 30-year Eurobond that Nigeria issued. So what they are doing is that they buy that Eurobond because Eurobond need $200,000 to buy it. So not everyone has got $200,000. So they buy that Eurobond and they chop it into bits. They are selling you a bit of that Eurobond. So when you buy that, if you take away their fees, you get about 4-5%. There are many of them in Nigeria, many money markets, Eurobond funds, and this stuff. So if I bring my money from the US to Nigeria, I get about 4-5% in dollars. But I now have the Nigerian country risk. So my money is in Nigeria. So I now bear that Nigerian country risk. But it's just that the options are out there, really. If you like, again, it's going to be based on your objectives. If your objective is to grow your principal and you can absorb that risk, fine, it's something that you want to take a peek at. Not recommending, just giving you guys options out there.
Okay, please, Juliet, I would like to get an opinion or an insight from you. If the money you send to someone in Nigeria, and I understood that you said GT kind of created a DOM account automatically. Now, would you be more comfortable if you send pounds and the person receives naira automatically? Like let's say you send 1,000 pounds and let's say the exchange rate is 500 naira to 1 pound. And you send 1,000 pounds, that's supposed to be like 500,000 naira. And the person receives 490k. Is this something that you could live with if you are to send the money to a relative in Nigeria.
I don't understand.
Okay,
I think I understand you. Can
let
I?
me repeat the question again. I just want. I'm looking this what I'm looking at, and I want to. I've been looking for how to get some people's opinions. What I meant is, let's say your sibling or your relative is living in the suburbs of Nigeria. Let's say Akwa Ibom State. So, and you want to send money to this person.
Okay.
You know, transfer when you send and the dom account is created, the person still goes to the bank, withdraws the dollar, then goes to the black market to convert it for a higher, for something higher. If you're more comfortable banking with an app that, or exchanging with an app that if you send the person the funds,
They
she
get
receive,
pounds.
yeah, they get the naira equivalent.
I didn't explain further. Now I mentioned two opinions. The one I tried was the Remitly one. So this one asked me for the person in Nigeria's mobile number. So I didn't complete the transaction. So I asked my sister to go to GT because she has a DOM account to get her NUBAN. Then I would complete it. But what that app was telling me was going to happen because I was going to send and she was going to receive dollar, right? And she will be able to take the dollar and then go to the black market and change. I was more than happy with that. But when I told a friend of mine now, I don't know how he tried to do his, but he was concerned about sending the money to his own account, right? So I don't know whether I don't know, maybe it was Revolut or what app he said he used. I'll have to find out. But whatever, it automatically created an account in GT, a DOM account in GT, and transferred the 50. He was going to do $50 to his new domiciliary account waiting for him in GT. But he doesn't have access to that account because he's not in account in Nigeria. But he also said that if GT was going to change that money, they were going to change it at bank rate. So he did not opt for that option. So he just said, okay, create the DOM account and directly leave that money there. So if I have access to take that money in Nigeria, I will do black market myself. I don't want bank rate.
Okay.
Okay,
Please, sir, can I say something? I don't know the protocol.
Yeah, you can
Okay,
go ahead and speak.
My name is Karamara Afam. I live in the United States.
Okay.
And for several years, I've been sending money to Nigeria. You know, the regular way to send money to your family and siblings in Nigeria. Before last year, before the COVID, the way I do is I either look for Nigerians who are in the US who kind of are middlemen / currency exchangers. Give them money here in the US and they pay in naira in your accounts. Now those guys were that their exchange rate was less than the black market exchange rate in Nigeria. So at that time, if money was 400, they may change for you at 350. That if the black market was changing at 400, then they will change for you at 350, or they will change for you at even a lesser amount or a lesser rate. However, after COVID, certain apps started to spring up, just like Juliet explained. There was this World Remit, not Remit, but World Remit. And there was this Sendwave. I don't know if anyone has heard of that Sendwave. The World Remit a couple of times. It wasn't so, well, I don't want to say negative of any app right now, but I think from my experience, I had a straight transaction.
Yeah, Kahama, I don't want us to talk about particular brands or apps or give them. So if you really have a question on that, or we would love to hear you out. But what I'll say is this, right? Like you said, there are lots of apps out there. Do your due diligence. The ones that will give you forex are very, very rare because CBN at the time passed a circular saying that they have to give you dollars. What CBN was trying to do was to kill those guys by saying, import your own dollars from the US to Nigeria and then pay it out, which of course is going to be impossible. No one is going, because it's not cost effective for them. The dollars in Nigeria, really, where do you think it comes from? The physical dollars you're holding in your hand. How do you think it came from the US to Nigeria? Someone had to put it on the plane and fly it here. That currency you have in your dollar account. It was brought on the plane and flown to Nigeria, and that's why it's here. So if that dollars we're trading, we're looking for the best price, but the physical dollars you want to hold in your hand is where the problem is. So I mean, I don't think people care. Nigerians don't spend dollars. What Nigerians want is the right exchange rate. If you are going to give me the exact black market rate, Nigerians don't care really about. I mean the guys that do the imports or the other side. If I send one to my mom in the village, I want to give her the best Naira rate, not the dollar. She can't spend dollars in the village. Ghana?
Yeah, you're right. So my question is, the aim of this forum, do you have an app or whatever you kind of advertising?
No, not really. We're just
my dollar give it to me at the exact
listen, I'm very careful to say to nominate or to promote apps, but I personally use Flutterwave, right? Flutterwave, I use Kyoshi. Flutterwave, just Google Flutterwave Bata. Flutterwave Bata. You might try it out and see if it works for you. Kyoshi, that's Koasi, Kyoshi. Google them and see if it works for you, right? They are like just as mentioned an app. You have to try it out, look at their board, look at who runs them, look at their reviews and see if it works for you. I really don't want to talk about or say, hey, I recommend this particular app for you, right? That's how I'll say it. Camera, does that work for you? Yeah.
Well, I'm just asking. I basically joined this program, and you guys are talking about apps and sending money to Nigeria, and I got interested, right? I want to know what's the aim of our discussion today.
We discussed every Saturday. We've been doing it for almost 2 years now. Every Saturday we talk about money, investing, personal finance. So this is just a topic we're doing today. And today we're talking about, we're reviewing 2022 investments. We're listening. If you have a question on investing, how to go about in 2023 or review your past years, just go ahead and ask. I will try to give, my own opinion, my educational opinion, more or less. Yeah. So this is we're doing this. We do this every time. We do this every Saturday and also on Monday.
Oh, got you.
Yeah.
Got you.
Super.
Okay. That sounds
excellent. Thank you so much. Appreciate you. Okay, I've got Oluke, and someone wants me to talk about arbitrage. But I've got Oluke. So, I mean, arbitrage is just when you have a price of an asset, the price of the asset is sold at a different price in different locations. For instance, dollar in Ghana and dollar in Nigeria is the same US dollar in Ghana, same US dollars in Nigeria. But if I use Naira, let me use a better example. If you want to fly to Europe from Ghana or fly to Europe from Nigeria, it is cheaper to buy your ticket in Ghana and fly to Europe than buying your ticket in Nigeria to fly to Europe. The thing is different. Let's just focus on this. So arbitrage means that if I can go to Ghana, I can buy a ticket and sell that ticket to Nigeria. So I'm arbitraging the price. I'm looking at the difference between the price of the same asset but in different locations and trying to make a profit off it. Same way if I buy gold in the US and I buy gold in Japan, if the difference in price exists, I could buy in Japan, sell in China or sell in the US to take advantage of the differential in price, either caused by lack of information or just market irrationality. So when you're doing arbitrage, you are trying to take advantage of the mispricing of the same asset class, either in the market or in a different market. That's what you're trying to do. It can be arbitrage in anything, but you are seeing this same product is sold at a higher price here. So I'm going to buy it away at a higher price and sell where it has a lower price. All right, let's get Oluke. Oluke, how are you doing? Magic 7, Magic K7. Go ahead, sir.
Hi, Carlo. How are you today? Thanks for the opportunity.
Yeah.
I was going to chip in on when you guys are talking about money transfer.
Yeah, go for it.
I live in the United Kingdom, and I'm just going to talk about my own experience sending money down to Nigeria. Before, traditionally, almost everyone I know has a contact of someone who does this money transfers. The sort of the pass around, they get referred by someone, and you just end up doing business with them, transferring money to their accounts, and they credit you in naira. So for every £100, they charge you £5 to send it, and that's been the way for about probably around 20 years now. We've always been sending. Then came the rise of letting you. They also go very close to the market rate, the black market rates, and they don't usually charge any fees. There were so many of them, small world remits. Quite a few of them, you had multiple to choose from. So I think the attraction to them then was the fact that they were not charging any fees. So and the fact that you also credit you within minutes with the old ways, the guys you know that you transfer to, you have to wait on them. Usually takes a couple of hours. Sometimes it's equally fast depending on who you're dealing with. But then came the CBN Act that stopped the payment out in naira, and that sort of just killed their business. I think there's still about two of them that still do pay out in dollars. They ask for your domiciliary account and they pay you out. I can't remember who exactly, but I think Small World Money Transfer, they ask you for your domiciliary accounts and they still do pay in dollars. And I believe there's another one. You can pick up. They have locations everywhere in Nigeria where you can pick up the currency if you want to. But essentially, the CBN Act killed a lot of these apps. So lately, there is one that is now currently making wave again in the UK. It's called Lemonade Finance. It's also an app. You credit them, and they pay you out in naira in minutes. I don't know how they're getting by this app sort of in naira, but Lemonade Finance is currently paying out in naira. And for everyone using it, once you sign up and using it, you refer and someone signs up and sends money a certain amount, they pay £10 as well. And I've had quite a few £10 they paid. But the interesting thing for me that happened recently was with them, I had more naira and I needed pounds. And I just thought, I should check if they do actually do the reverse the other way. And they actually do. They see to credit, and I didn't have to speak to anyone. I just selected naira to pounds, and the OPay was sort of in my name.
What's the name of the app? What's the name?
Say that.
What's the name of the app?
Lemonade Finance.
Oh, Lemonade. Gotcha. Okay.
Yeah. So they just my credited the OPay Finance, the OPay account. I don't know how that was opened in my name. I don't have any idea. And probably about 30 minutes after, they credited my UK account with pounds. So, and so far so good for, I don't know anything about the company. I don't know who owns it. So far so good. Hundreds of people that I know have been using it effectively. So that's just my take on that.
We're going to add that to our list of apps to check out and see if we can use it. I think 2023, for everyone's going to spend a lot of money. I think the government is going to spend a lot of money. We need dollars to flow in. We need dollars to flow in. So any way we can get investment dollars or personal dollars to come into the country, wonderful. Remittances are all welfare. To get investment dollars to flow to Nigeria, that's when we then get that big boost. Hey, Promise, what's up? Go ahead. Promise, you've got the floor. Go ahead, sir.
Good evening, everyone.
Hi.
I mean, thank you, a whole lot of people are
Promise.
country. I'm making
Yeah, Promise. Your audio is very low. Is this? Can you speak up, or how does it work? Promise, go ahead. Okay, Promise. All right. All right, let me get Ola, Slim Tenny. Go ahead, sir.
Can you hear me?
I can hear you, Promise. Go ahead. Yeah, lot better now. Go ahead.
Okay, good evening, everyone. So, I'm just joining this space. This is my first time. Thank you, Mr. Cook. I saw let's review our 2022 investment and portfolio and looking to 2023. I have not been on investment for because I'm actually studying investment. Sorry, I'm going off about UK art. It's just about investment. I hope
Yes, you are. Please go ahead. Yeah, love it.
So, because of the whole crisis we're having in the economy and everything, I've just sat down to take a look at how I can make investments, which is actually, sometimes you earn like once in a month and you spend every day of the month. So it's really crazy, and I literally wanted to get more insight on how I can try to invest and still, have a little to spend for the next. Maybe for people that are living on salary, you understand what I mean.
Okay, so let's use you as a case study. Let's use you as a case study, right? Don't tell me
no problem.
Don't tell me your particular age, but are you below 20, below 30, below 40, below 50?
I'm below 20. Yeah. I'm sorry, I'm below 20. I'm
below 30. Are you married?
No, I'm not married.
Okay, do you have dependents?
I just got to.
Oh, gotcha. Are you doing a job?
Actually, not really, but I do.
Got you. I mean, the best advice I will give you is to get a job. When I mean a job, get income, steady income. That's the best advice I'm going to give you right now. So if you had a job, for instance, right, and you were that age you told me about, right, I would say that your objective right now, like I said, at the very, very top is accumulation. You have the same amount of time, 24 hours, with everybody else, but you need to start to accumulate assets. What an income does for you is an income allows you, I'm going to be very careful here, to use leverage. An income allows you to borrow. When I mean borrow, I mean you can use that borrowing and invest in assets today that the price of those assets go up tomorrow. So let's say you had a job and you were 25 years old, you just started to work, right? The very, very first thing I would say you want to do, the very, very first investment you want to do is to try to build an emergency fund. So you want to take 3 to 6 months of your expenses, the ones that you must make, whatever happens to you. Even if you lose your job, you must make these expenses. You want to open an account, call it an emergency fund, and you are saving just cash or near cash in that fund. So what are your necessary expenses? Your rent, your feeding, maybe the gas for your car, the things that you must do if you don't have any income for the next 3 months. So you want to say, what do I spend in 1 month on rent? Divided by 12, save at least 3 months of that. You don't have to save it immediately, but have to fund and start to build up that 3 months saving. It has to be 3 to 6 months. The idea is that this is your insurance, your cash flow insurance. If anything happens to you, you fall back on that emergency fund. When you do your emergency fund, the next thing you want to do is, if you are married or you have dependents, you want to buy life insurance. Now, life insurance does not protect your life, it protects your loss of income. So what you're saying is that if you have a dependent, if you're married to someone or you have kids, what you are protecting is that if you go away, there's income that they would have gotten if you were there that goes to them. So you can ensure, you can pick a life policy of say 5 times your annual basic. The Nigerian pension industry gives you 3 times. You can pick 5, you can pick 10. Yes, you can say, hey, this insurance can give it to a trust and say, if something happens to me, this money should go to the education of my kids or should go to pay off my mortgage. You can link that insurance payment to something or just to pay your dependents, right? So you do number one, your emergency fund. Number two, you do your life insurance policy. It's only after you have done that number one and done that number two can you start to invest. That's only when I would say you can invest. Where do you start investing from? The first place you want to invest is in your company retirement plan. So in Nigeria, if you have a retirement savings account, you do that one first. If you're in America, you have a 401k, do that one first. You don't invest outside. You first of all invest through the government's pension plan. Why? Because it has tax advantages. When you put money in a government, should we say, in a retirement plan, you are deferring taxes. So any money you put in there is not, that income is not taxed. So you are deferring taxes and you are allowing that money to be rolled, right? That's what you want to do. So you first of all do the 401k if you're in America. If you're in America, that's what so they call an IRA. The IRA is so good that the American government will restrict how much you can put in it. So if in America, you want to Google what's called a Roth IRA, ROTH, the Roth IRA. Do those first before you invest out. So number one, your emergency fund. Number two, your life insurance. Number three, your retirement. You start to save for your retirement today. Why? Because it's got tax advantages, number one. And number two, it allows you to compound earlier. When you do this three, then you can start to buy, whether you want to buy shares, you want to buy bonds according to your risk profile and your objective. If you're a younger person, you don't know anything about the market, you want to look at ETFs, exchange traded funds, because they are cheaper, they give you diversification. You can buy one ETF and that gives you exposure to all the stocks in the world, or all the stocks in America, or all the stocks in Nigeria. So you can easily build a portfolio by simply saying, I'm just going to buy this ETF, I get exposure to the world, to America, to Japan, to Nigeria. You can build a portfolio like that before you necessarily do individuals. One, if you can do these 4 things I've talked about, you are nearly there. Remember, investing is a habit. So you don't want to do it today and stop. You want to keep on investing. You want to keep on keeping that 6 months emergency fund. You want to have life insurance updated. You want to watch your expenses and your spending. And then you want to keep on investing. You want to create your net worth as you are younger. So that when you get older, the net worth then starts to pay back. When you get older, your income, all things being equal, will increase. But you have less time for compounding. Promise, that's my pathway for you, right? That's what you want to do. Yeah? Does that work for you?
Yeah, I really appreciate this. Is like I've never heard it before. I used to say that I'm going to study finance, so I will understand, because the future is like getting crazy. So I was like build up before it gets crazy. So I would have to stuff like that. But all these you say, this is literally amazing. Like I don't know. I'm just writing things down. Like, thank you very much.
Yeah, you can try to. I have a book. If you can buy the book, it helps you. I also written a lot of articles that are in the book and they're out there for free. So the book just puts everything in one. The book's on my TL, or just look at my article and do it step by step. You have to know that you can't invest if you don't have a life insurance policy or an emergency fund. Why? If you lose the money in your investment, you don't have money to feed. But you have an emergency fund and you lose your job, at least you've got 3 months to get yourself together. So your number one target, like I said, is to go get a job. You get a job, follow exactly what I've said. This is going to be recorded, so you can all go back and listen to this, right? Get a job and then follow the path of me, right?
Thank you very much.
You're welcome, promise. Have a good one. Yep, nice one. I got Ola Slim Tenny. What's up, sir? On the floor. Ola Slim Tenny. Hey.
Yeah. Good evening, everyone.
Hey.
so much. Can you hear me?
Yes, I can.
Okay, great. The last speaker actually asked my question, and I had to consider making choices because you already asked one of the questions I was actually going to talk about. And thank you so much. That was so insightful. I never thought about the place of saving. I mean, getting life insurance is important, particularly when you are student. So I got the idea about getting saving for emergency fund that, like you said, having savings that can last for 6 months without income. I think accurate. I don't know for sure if I wrote down.
Yeah, that's what 3 to 6 months. The technical term is your non-discretionary expenses, the expenses you must make, irrespective. Your rent, your food, your gas. 3 to 6 months, say, build that up before you start to invest.
Oh, great. Thank you so much, sir. My other question is, because I'm actually trying out some investment this year, and I got born. I got born.
You bought bonds?
I said I tried out some investment, and I got bonds. I actually lost the capital.
Gotcha.
Yeah, 2 years ago I lost some bonds, and trust me, it got me stressed. Because I've never tried out such an investment before, and I'm just trying to see as one of the challenges. And really, I don't want to give up on investment, and so.
Can I ask you? Can I ask you what you invested in and how old you are? If you don't mind, you can give me just the range.
Okay, that's good. So I'm within the range of 35 to 30.
Okay. What did you invest in?
So I invested in
Forex. Okay.
Now, not with a stranger, with a trusted friend, like a childhood friend.
I hear you.
Other people. So
I hear you.
So I actually did that investment because I got an admission to university in the United States, scholarship, but I think the acceptance is very high.
Wow.
There's no way I can get it job, and I said, if you to try it out, take part of my savings and invest in it. Correct. What will happen? I had a deadline for paying the acceptance fee coming up, so I had to make that decision.
Oh my God! So Ola, just hang in there, right? So I wish you had given me a call or I'd met you maybe before you made the investment. Let me just say a few things about Forex, quote unquote, investing. You don't invest in Forex. There's no investment called Forex. Forex is like saying you invested in Naira, right? What they tell you Forex is that they tell you don't want to trade. When you are trading Forex, what you are trying to do is to foresee the economy of the world. You are saying that the US economy will go up or come down, or there will be a recession or there will be a recession. You might not have the means or the research ability to understand what's going on. So investment to me in currency, that's not investment. They promise you a fixed return. That's wrong. You can never ever make consistent funds in Forex. Never. Anyone telling you that is lying to you. And since you had a set objective, you had to pay a fee. Your 400,000 should not have been invested at all. That should have been your seed. And you say, hey, how can I add to this? You can't invest your seed. Like you can't take your maize seed, right? And then cook rice with it. You plant your maize seed, you get more seeds, then you eat some rice, then you sell the excess seed. You never ever take your seed and you throw it into an investment. So currency was wrong. Whoever gave you that idea, you should never have done that with what you had. I would have said you try to have a target, maybe 2-3 years, and see if you can save, or even try to get over there and get a job there. But please do not look at currency trading as an investment. It's trading. You can do 1% if you want to, you can do 2% if you want to, but never ever take currency trading and say, this is how I'm going to invest and grow my revenues, or this is how I'm going to retire. You can never make money with that. all the banks lose money on currency trading. It's trading, it's arbitrage, it's high risk, and you need a lot of money to make money. The difference between dollar and yen is not up to maybe 10 pips. So all that you can make profit is they just try to get you to trade. What naira to dollar, yes, is 300 differential. The difference between dollar, yen, euros is not up to how many pips. So how do you make the profit? You need billions to trade in currency. So I'm so sorry you lost that money. Still there. I'm so sorry. Yeah. So what do you want to do now? So you've lost your 400,000. How is the school coming along? You don't have the school anymore. What do you want to do? You got the scholarship, right? Do you have a job? You have a job. Okay. So are you married? So what's your plan? You want to leave Nigeria or you want to stay in Nigeria? What are you looking at?
The plan is actually to Nigeria. That's the plan. But now I'm good, and I'm looking at getting a better paying job now.
You know, excellent. I was going to say that your first goal is to get a better paying job. Your second goal is to get a skill. If you can learn a skill in Nigeria, then it's possible that you can actually make more in Nigeria. Then that gives you the allowance to plan better. If you don't have a good job, you're always going to be in debt. And if you don't have a skill, you really can't sustain yourself. So I would also say, as part of a financial plan, try 2023 to see if you can upskill. IT has tons of upskill, medical, so try to upskill so you can at least increase your income, right? That's maybe because it's going to be a plan for you. Gotcha. Excellent. I would have done that and not invested in the currency if you had told me about it. But we learn every day, right? Thank you so much for calling. I wish you the very, very best. Yeah, go get it, right? All right, Tijani, hi. Tijani, sorry, you've been dropping in and out. Let us get you before you drop off. Tijani, bye, go ahead. Tijani, you've got the floor.
Oh, hi. Good evening, Kalu.
How you doing?
Yeah, I'm doing good. I'm good.
Great.
So, with regard to the pathway that you outlined for one of the speakers, the questioners earlier, so it triggered the question in my mind. I've for like more than a year or thereabouts now, I've been into investing a little bit, usually in the stock market.
Yeah.
And so I think probably because I've not really had time to sort of like go in depth into it, but I was hoping you would have something for me to say that if you mentioned life insurance in terms of if your funds are usually themselves here, you can do that with your bank account or with your salary. But if for currently like about 95% of my investment, that's the kind of shares I've been buying American companies. So I was wondering what are the mechanisms that one can use to sort of like ensure that thinking of your dependents and family in the event of, let's say, death or something like that. Okay. How can you ensure transfer of ownership in case of death?
Okay, great question, Jan. And let me just make a point. Those steps are for everybody. It's not have to do with your age. Those steps are for everybody. Before you invest, the very, very first thing you do is number one, you want to build your emergency fund. Your emergency fund is 3 to 6 months of your what we call non-discretionary or what you might call necessary expenses. That's the first thing you do. Build your emergency fund, number one. Number two, you ask yourself, do you have dependent? Dependent means if you go away, will your loss of income affect anybody? If the answer is yes, then you want to buy life insurance. You can't insure your life, you are insuring the loss of income. Number three, you want to do your retirement, right? You want to do the company retirement first. If you're in Nigeria, RSC. If you're in America, Roth IRA, then your 401k. Do your Roth IRA, do your 401k. You do those three first before you invest. That's the most. So 1, 2, 3 before you invest. Cool. Let's go back to your specific question. I hear you say you are buying ETFs, you are buying American team ETFs. How can you do your insurance? If you have to speak to a lawyer, they have lots of trust companies in Nigeria. It is possible to link your insurance payout. It doesn't go to your will. Link your insurance payout to your trust, create a trust, and say the money for this life insurance company will be paid to this trust. Appoint a corporate trustee, then tell the trustee what you want done. The money will go to my kid, it will pay for his education, pay for this one's education. Any balance after they go to school can go to the mom, or can go to the church or the mosque, whatever charity you want. The trust allows you to lock up your assets. You don't go to probate, no one will fight over it. They can't fight, you can't go to the trust company and fight over your assets. It's locked in there. That's why it's locked better for you. They may charge you, but what you're paying for is that certainty of that your assets will not be dissipated. So go speak to a lawyer or trust company and see what you can do, right? That's what you want to do. Exactly.
Yeah, fantastic. Thank you so much.
All right, Jenny, appreciate you saying that. All right, thank you so much. Let's get live show. I've got Agines, Agines. Did I get that right?
Oh, hi, that's life issues.
Life issues. Hi, hello. Great. What's up? All right, go ahead.
Oh, hi. Okay, I just wanted to add my own 5 cents to this. I live in the UK, and what I have been invested in, apart from the pension that you said, and the life insurance that you talked about, because that is paramount. And like you said, you're ensuring the fact that if anything happens to me, my family, they are sure of my burial, and they're depending on my house is taken care of. I don't want my son being worried about that when I die. I lost my dad 2 years ago, and I know what happens trying to bury. And I don't want my children to pass through that. I want them to have that safe money of £2,000. If anything happens to me, they have that money. And I think everybody should do that. For pension, if you work as a teacher or a nurse in the UK, you have a pension. And what happens is that most people, they will opt out of the pension because they want to get the money. But for me personally, I think it's just a matter of you are killing yourself. Yeah, they take like maybe 10% of your salary, but when you look at it at the end of the day, if anything happens to me while I'm in active service, my family is assured of £150,000. And if anything happens to me now, that money is there for my family, and that is a lot of money. And I have a lot of my friends during the COVID, when they died, their family got that money, and because it's a trusted government fund, and there's enough, that money has been there over the years, and they'll pay you out the money. And for those who are not Nigerians, I wonder why somebody, because of 300, 500 and payment, you opt out, because when you pay the 300, your company pays close to 700, they add to the fund. That's how pension works. Another thing I have found that I'm investing now on coins. Mint coins, yeah. They have the Mint House, which is the government, UK Mint, as you know, the currency. When we put that mint the currency, they sometimes bring out these rare coins that maybe they only have 10 out of it, or maybe 50 out of it, and they will sell it for like £50 or £35. What I've learned watching all these money, shows and everything is that over the years, it might not be for me, it might be for my grandchildren. This money would come a treasure. There was one video I was watching, these they are normal, what they call now when they go on a road show, they are buying auctions, and somebody put a coin from the grandfather's attic, and that coin was worth close to £250,000. And I'm like, why don't I start buying this coin, keeping it for my great-grandchildren, for my grandchildren? So that's what I'm doing now. Every time they pay me, I go to the Mint website and I buy a rare coin. Like when they paid her burial, they printed 20 rare coins sold. They have the one for the king generation that is coming. I'm going to print some. Buy them, keep them. This time, when you make this investment, even if you have a good job, it's not for you. It's for your children or for your children's children. Why people make money, maybe they make old money or make money from inheritance or from, it's all these things, all these investments, not a selfish investment. It is an investment thinking about your children. Now, another advice I will need from you while I'm listening is how do I get into stock in the UK? Because times I'm trying to when I was in Nigeria, I used to buy shares and everything. When the UK is so tight and I don't know how to break into it, the people have tried to use Fortune 500. These companies they ask you, but I must have maybe 5,000 or 10,000 for you to go into stock.
Gotcha.
But is there any way or any small way of getting into stock? Maybe I have £50 here, £100 there, and I'm not doing it for myself. I'm doing it for myself. I would like to get that advice. Thank you so much.
Great. I think you asked a lot of great questions. I won't just take my time and answer, because I think many people are going to just learn from the answers. And thank you for this question. I think you're doing some good stuff, right? Let me start with the life insurance you spoke about. One hack I've seen is this: if you buy a house abroad, you pay 5%. So the house is maybe worth $300,000, but you pay 5%, then you own the home. So the home is yours. If you pass away, of course, the home's mortgage cannot be paid now by your next of kin because you don't have any income. Then you might lose that house. So what I've seen people do is that they buy life insurance to the value of that home. And remember, you can buy lots of life insurance. So you can buy life insurance for $300,000, and then they basically tell the life insurance company, on my passing, this fund should be used to pay down the mortgage. If any balance, give it to my dependents. So what you've done automatically is you said that you buy a house for 5%, but that house is yours, 100% paid. It's yours. You now have it 100%, which means that if anything happens to you, the house is going to be paid by the insurance company. Your kids get that house in America or the UK, boom, free of charge. You can do that in Nigeria as well. I'm not sure the rate in Nigeria, but that's a strategy I've seen people do that you can also incorporate. So you just buy life insurance for a house. You buy another house, buy another life insurance, term loan. Just do normal term loan. Don't do any specific. Don't do any term life insurance. Don't do any funny. Just $30,000 term loan. You pay the premiums. If anything happens, insurance company pays your mortgage. You own that. Your estate owns that house. That's a good hack you can do. That's number one. Number two, you spoke about the retirement and how many people don't invest. Please, if you're listening to me, if you're in Nigeria, wherever you are, if the government creates a retirement scheme, like in Nigeria, we have the retirement savings account. In America, they have the 401ks. They also have the Roth IRAs, ROTH, individual retirement accounts. Make sure you participate. In Nigeria, when you open up a retirement savings account, you pay 8%. Your employer pays 10%. That's a 10% salary increase for you if you have a retirement savings account. So you must do those investment account. In America, most companies will tell you if you have a 401k and you invest, say, 4%, then we will match you. Which means once you put money in, they match you. So you put $1 in, they put $1 in. They will cap that match. They will match you up to say 6% or whatever. But that's also free money. That means if you put $1 into your investment, the company puts the $1. So what you must do if you're living abroad is to ask your HR, what is the company match on my retirement account? If they tell you it's 10%, 15%, max it out. Make sure you max out the company match. That's why I say you must do your emergency fund first. Number two, you must do your life. Number three, you must do your retirement. Max it out. Roth IRAs are so good. The government caps it only at $6,000 at least for 2022. Make sure when you max out your 401k, you also max out your IRA, because you are hiding, in quote, you are taking that money away from being taxed. So make sure you max. Don't say how to spend money today. Guys, your most important investment is your retirement, not your current fees, but your retirement, because when you get old, you can't hustle. Number three, you are asking about you talked about investing in coins. Coins are what we call alternative investment classes. Why they're pretty good is that they're not correlated. The coin's value does not go up and down with inflation. It doesn't go up and down with recession. Its value is simply because it's rare. It's like art. So if you buy art, even if you see those bags that ladies carry, those Belkin bags from Louis Vuitton, so those things have a better return than bonds and even the shares of the bond index market, because they are very rare, so their price tends to go up, right? So alternative investments are something you want to consider. Maybe 1%, 2% of your portfolio. If you get the really rare ones and you keep them, not even coins, comics, paintings. In Nigeria, we have all these records. You have all these old records you have. If you have those old records, try to keep them, especially if they're not open. Go to your village, all those old antiquities. If it's not open, just take it nicely and keep it. It's worth a lot. All those Atari, some people are all doing Atari games. Those things are of value if they are open and well preserved. It's those old bicycles you have that you have a chopper bike. If it's looking good, keep them. You can sell them. People buy all those things, right? So alternative investments are very good. They beat inflation, or sorry, they give you a portfolio diversification, and they are not correlated. The last thing you spoke about was what to invest in shares. You don't want to, how can you get in? I will talk about the American side, right? You cannot know the UK side. The way to do it is to try to get an app, and those apps allow you to buy fractional ETFs. Fractional ETFs. You can buy an ETF with $5. So if you, I don't advertise, but if you get all those Robinhood type of apps, you can invest in the market. VTI, Vanguard is a huge money manager, right? Vanguard has what they call VT. If you buy VT, you bought all the stocks in the world. If you buy VTI, you bought all the stocks in America. If you buy BYMI, you bought all the dividend-paying stocks in America. If you buy VNX, you bought all real estate REITs in America that Vanguard is carrying. That's a smart, cheap way for you to invest in the market. The UK would have their own version. So get those kind of apps. They just say every month, every week, if they give my paycheck, I take 10%, £25, I put it there, I buy the index. Because when you buy the index, you are buying the entire country, right? And it's passive investing. You put the money there. I personally like dividend stocks. If it doesn't pay me dividends, I don't buy it. So I like Tesla, but it doesn't pay dividends, I don't buy it. Why? Because dividends sort of protect you, stocks don't go up. So I would say try to get I think there's some bull. You guys will help me out. I don't know UK that much. The apps you guys have in UK fractional, like the Robinhood type of apps. Nigeria, you've got Chaka, you've got Cowrywise, they're regulated by the SEC. You can get those apps in Nigeria and invest in the US by buying all this BTI kind of equity and all that. But that's what you want to do. If you don't know what you are doing, try to buy the ETFs, understand the market. First, it's cheaper, it's diversification. Then when you are now a pro, you can look at buying the individual stocks one by one. I took a lot of time answering you, so I'm going to let you go. Is that okay?
Yeah, thank you. I'm going to drop. Thank you.
Thank you. Let's get on. So I can't tell the Cassilator. Cassilator, got the floor. Go ahead.
All right, thank you, Carlo, for the amazing work you've been doing. I don't know if you can hear me, right?
Yes.
So my own is a very straightforward question. There is this I saw on your wall, and I later got an email from my RSA about the possibility of using the 25% of my RSA to get a residential mortgage. But this is something I don't really understand, and I'm really, really skeptical about. I don't know if you could maybe give some insight. It's something someone should be thinking about. I don't know. How does it work in Nigeria? Like, because this mortgage is like foreign stuff.
Oh, really?
I don't know how it works back here.
Great question.
I would really like you to throw some light. Thank you so much.
Yeah, it was a great question, and we actually had a space on this. We had a space on this mortgage, safe mortgage. So if you can, when you're done, try to look for this space on my YouTube or on the podcast on my team. I just try to also listen to that. So what Nigeria has done is this: we have a pension system in Nigeria where it allows you to save for long term. So if you are 25 years old and you work, you can have that money saved till you are 65 or till when you retire. So we have this pool of long-term assets in Nigeria, and we've been looking for how to invest it. Right now, the pension fund companies like long-term assets because they have long-term liabilities. So they prefer long-term assets. And we've been looking for a way to do mortgages or how to invest in real estate. Till now, they've now brought out this policy. This policy says if you have a retirement savings account, you can access 25% of that money towards paying down a mortgage loan, right? So if you go to a mortgage bank and you want to buy a house, you can use 25% of your retirement savings account as the down payment towards that mortgage. So it's very, very good. It's a very, very good way. It's also what they have in America, and I don't know if UK has it, but America also have, you can take a part of your IRA and all and buy into a mortgage. So it gives you a chance to dip your hand into that savings that you have accumulated over the years and buy into a fixed asset like a house. Or if you are working, you buy a house, you become the house owner. Essentially, you're now doing rent to own. So it's very, very good. That's how it's going to work. So if you have a house you want to buy, they're going to ask you, hey, pay this equity down. You can run to your RSC. I think it's capped at 25%. If you need more than that, you have to bring in outside investments. But you and your wife can combine together and do it. So the way they do it is that you and your wife can combine together as one and purchase that house with that down payment. So it's really a good deal for you. If you have the money in your RSA and you want to buy a house, I would say definitely take advantage of it.
All right, thank you so much. I also want to know if these mortgage companies are they really around? I don't know.
I think there are a few of them. I mean, there are a few of them. Mortgage. We don't really have mortgage in Nigeria. We have bank loans to buy a house, right? Because it's short term. In America, you can get a 30-year mortgage. That's a real loan to buy a house. Because when you let the loan out, you reduce the repayment. Buy a 10 million house for 5 years. It's very, very expensive for you. So I think some banks, I would rather try to go with a mortgage around for a longer term, right? Because you want to have experience and capacity. There are a few of them around. I don't want to mention any names, but yeah, try to look at it this way. Try to work with them, the ones with the PFAs are working with, or the ones that have been around for a very, very long time. The ones that have been around have very, very expensive homes. I get it, but there are a few guys here and there. Always try to ask for past referrals, ask for people that have done with them, so that we are not really burnt. But yeah, Nigeria that market this pension act now will create a lot of new companies that will then come out because now they know that we all have 25% equity, so it's going to boost that market now. Yeah. All right,
thank you.
You're very welcome. Let's get EDME. EDME, go ahead, sir. You got the floor.
Hey, Carlo. Good evening.
Hey, how are you doing today?
Yeah, I'm doing great. Thank you so much for the space. So I just want to get some insight on investments. Okay, so I read one of the tweets the other time where you talked about an accountant. Like you cited that as an example, Joe, about being an accountant and not having to resign from your job. Yeah, I don't know if you remember that tweet. Yeah. So I actually do that right now. I something similar because I do a 9 to 5, but I also do something on the side. And so now, most times I am unable to actually how would I explain it now? Like to say, okay, to track what is actually coming out from, to track the income that comes out from, should I call it my side hustle now? So, and that which comes from the company that I work with. So it's just like I put everything together, and in the end, the two incomes just sort out everything that I need to sort out. Do you understand? So, could you give me any advice on how to track what comes out from my different sources and how to maybe manage that?
Okay, I think the best thing is just get an app. I use Mint. There's also Personal Capital. There are lots of apps out there that can track all your income, can track your expenses. You can put in all your different sources, your passive income, rental income, investments, and it can give you like reports. Hey, this is what you're doing here. This is what you're doing here. Very, very, very important to track it so you can know exactly what you're doing. But let me also give you some insight, right? Let me try to make it very, very simple, right? You have 5. Let me do 1, 2, 3, 4, 5. Number one is your active income. So number one is your active income. Active income means that the income you make when you are at work. You are actively at work. So your salary, or you go to work as a laborer, your laborer, you want to pay you, or you drive a taxi or Uber, active income. The second income is what you call your passive income. This is like you don't have to be at work, but you have investments or you have a property and it's paying you rent. So you're not there physically, but you're earning the income. That's a passive income. So you have active and passive. Active is number one, passive is number two, right? Number three is your expenses. Number three, the first one is going to be your non-discretionary expenses. These are the expenses you must make irrespective of your income. So you must eat, you must pay rent. If you fall sick, you must treat yourself, which means these are it's not up to your discretion. You must make them. So number three are your non-discretionary expenses. You have to make them. Number four are your discretionary expenses, which means you can buy a new Chelsea jersey, you can go on a holiday or buy DSTV. These ones you can say, I'm not going to do them and nothing will happen to you, which is up to your discretion. So 1, 2, 3, 4. What you want to do, the reason why you are working is this. You want your number two, that passive income. You want that number two to start to pay your number three, your non-discretionary expenses. Your passive income, the number two, the one you make when you are not there, is your most important income source. You want to grow it so that it pays your number three, your non-discretionary income. So when you are working, your goal to get a job is to take your income from number one, which is your active income, and grow your number two, which is your passive income. So what I mean is this, they pay you a salary. That's your active income. You take your salary, you invest in property or in shares or whatever you want to invest in. The returns you make from that investment is your passive income, number two. So you see the connection. The more you invest, number one, the more you grow, number two. The more you grow, number two, the more you can easily pay off number three, your non-discretionary income. Retirement occurs for you when your number two, your passive income, can pay off your number three, your non-discretionary income. Elon Musk is rich today because his passive income is equity ownership in Tesla, Twitter, whatever it is, right, can pay his expenses if he stays in bed for 10 years. Same with Warren Buffett, same with Dangote. But if you are still working and earning a salary, right, and you don't invest it to grow your passive income, should the salary stop working because of COVID or recession, you can't live off your salary. So then your passive income is what you're going to use to pay your non-discretionary expenses. So when we say you get a job, we're asking you to grow number one and number two. You have to buy an app that will allow you to track your income, track your passive income sources, so that you are always comparing. Every year this is your target. How much of my total expenses, that's ND, non-discretionary expenses, or even your total expenses, are you now paying from your passive income? Start with 1%. Say my goal in 2023 is that I want 1% of my passive income to be total expenses. And then start to give yourself a target. Every year, I'll move it up, I'll move it up, I'll move it up. That's what you want to do. That's an easy way to track those 4 boxes. Passive income, active income, non-discretionary income, discretionary income. If your income cannot pay your passive, your non-discretionary expenses, you either have a wrong job or you have quoted many things as non-discretionary that are not. It's bribe, non-discretionary. It's giving money to your mom, non-discretionary. You have to ask questions. But those 4 boxes, whatever app you're buying, you want to make sure you can track those 4. I think Mate does that. There are many ways you can track all this and make sure that every year you are trying to pay your expenses with your passive income. Make sense to you, sir?
Absolutely. Thank you so much for the insight.
Yeah. All right. So I don't want to plug my book, guys. I don't know if I'm selling my book, but it's in the book. It's right there in the book. If you get the book, it shows you your cash flow budgeting, how you can go from passive, all that income. So if you get it, and the articles are also written for free. I wrote a lot of articles on this for free. Just Google my name, Nairametrics. So you see them. So if you don't buy the book, get the free article. I'm not trying to sell it. Yeah. But the book does have it all. Jeff, hey, what's up, Jeff? Welcome.
Thank you.
You're very welcome, sir. Jeff Spirit, what's happening? Jeff? Jeff going once, Jeff going twice. Let's get Ken AJ. Ken AJ 37, what's up?
Hello. Good evening.
How you doing, sir?
Yeah, thank you so much for this space. I've been learning about investment lately. I'm in Norway right now, but of course I'm Nigerian. So I learned about this new gold ETF in Nigeria, and it's one of the most profitable ETFs in the world. A very high return on investment. So I would like you to educate us more on this new gold ETF and ETF in general. Okay. Then, secondly, I've also been learning about index funds, the S&P 500 and the rest of them. And that this index fund, it has a lot of compounding. And so now for this ETF, for instance, now I learned that you cannot really compound the ETF, that you pay out the dividends and all that. So I like to learn a smart way of reinvesting proceeds from the ETF, since one is thinking long term, and then also you talked about trust funds. Do we have trust funds in Nigeria? And that's the worry I have.
Let's take this forward. There are a lot, and they're going to like the explanation. New gold ETF in Nigeria, why it's performing very well is because the mechanism in that ETF allows you to invest in gold. And that ETF is also traded in South Africa. So some guys found out that you can actually buy it in Nigeria and get dollars in South Africa. That's the hack. That's what's going on there. So it's the number one performing ETF in Nigeria. But again, guys, I'm not making a recommendation. If you're buying today, you are buying it at the already inflated price, because that ETF, lots of people are now buying it or now know about it. So you are buying at the peak of its performance, which means can it keep on going higher? The guys that found about this ETF found it a long time ago. I know what I'm talking about this ETF, I believe 2 years ago. There's a speech I did or an article I did about this particular ETF. So if you've been following me, heard about this ETF and they've gotten it. So if you're buying now, just be worried that you're buying at the top end. But that's the hack. It's a gold ETF. So if you're buying an ETF, you're essentially buying that you can exchange. It's sort of hedging your naira by exposing yourself to gold, and you can sell it in South Africa. That's what's going on here, right? The second question about index funds. So you guys just understand what's going on, right? If you want to buy, sell, or sell shares, you go to the Nigerian stock market, or the New York stock market, or even the NASDAQ, right? That's all the stocks quoted there. Someone can create an index, like a telephone book. So I create a telephone book of all the shares quoted in the Nigerian stock exchange. That telephone book becomes my index, right? So index. So if I buy an index fund, I'm buying a fund that is buying that telephone book. It's buying all the shares in that telephone book. So instead of me buying Dangote Cement, Zenith Bank, and MTN, I just buy the Nigerian ETF. I think that's an NGX ETF. Once I buy that NGX ETF, I have bought all those 30 stocks automatically. You get it? So it's a faster, cheaper, diversified way to invest in a market or a sector. And you can buy an ETF with $10, $20. Most of these apps give you fractionalized purchasing. You can buy that ETF index fund as a fraction, and you can get the same thing at that market. I'm not recommending VT, that's Vanguard, VTI, that's for the US, and all that. So if you don't go to Vanguard or Schwab, they have lots of ETFs. Even Nigeria, IBTC is lots of index funds, UBA, index funds, lots of funds that invest in the market, right? UBA also has, Afri Invest also has. So do your research. Also, I wrote an article on ETFs in Nigeria and abroad where I listed all the ETFs in Nigeria. I give a lot of insight. Just Google Kalu Aja ETFs, Nairametrics, it will come up, or get the book, it's there. Let me also answer your question on how you can reinvest ETFs, right? On most of these apps, there's something you can create that you can do dividend reinvestment. It's called DRIPS, DRIPS. So when you select that option, the ETF company will automatically invest your dividends. You don't have to tell them anything. So once they pay a dividend, they just use it and buy it for you next year. Any ETF I buy, I always select the reinvest option. I never buy it, it doesn't have reinvestment. I don't have the time now, so I buy it, it's reinvested for me. So Google Drip, you ask the app, hey, do you guys have this feature? Does that have a drip feature? Also, most companies also give you a drip plan separate. So if you go directly say this company, hey, you can say I want a drip plan. So they give you, they make dividends, just buy you more shares on some market. You have to ask them. So make sure you ask them about that. Then your last question on trust funds. Yeah, we have lots of trust funds. Many banks have trust subsidiaries. Many lawyers will do a trust for you. All a trust is just a company set up by a trustee that has the member. So you just say, hey, my trust is my house in my village, my car in my trust, everything is in my trust. The advantage is that nobody can come to you and start saying, oh, you're my brother's cousin, I took your money. But if you're not in the trust, you're not in the trust. So you see these American kids, they are trust fund based. That's what they do. And trust funds also allow you to do what you call skipping a generation. You, as a guy, can say, I'm not going to give my money to my child, I'm going to give my money to my grandchild. What are you doing? Avoiding taxes. Because if your grandchild doesn't get, your child doesn't get the money, there's no transfer or estate taxes goes to your grandchild. So you skip that generation and it's passing to him the lower tax base, right? The kid has a lower tax base. So speak to a lawyer. You get lots of good stuff that you can do with trust. Yeah. Great questions, Ken.
Yeah. Thank you so much.
You are very welcome.
Can I ask just one more before I go?
Sure.
Okay, now, man, one of my worries is the unstable nature of the naira, and so the when I heard about the gold ETF, my interest is that when you invest in this gold ETF, it kind of helps you to hedge against what they call against the loss of value. So that's one of my interests. But
Yeah.
I think
I hear what you're saying. You want to hedge against the naira by buying a commodity like gold. I hear you, but because you're buying an ETF, make sure you look at the price that you're getting in now, right? I don't look at maybe they give you. Look at the historical price and ask yourself if you bought gold through other means, right? Because you're in Norway, so you have lots of options. You can buy gold directly. You can buy Barron's gold. You can buy the ETF. You can buy a company that mines gold. You just want exposure to stability. That's what you're asking for. So on your app, just Google commodities gold ETFs. We give you lots of options. There's Alaska. There's everything is down there. So because in Norway you have tons of options, look at them and see if they fit. And look at the new gold ETF as well and see if it also fits. You want stability and liquidity. If you can buy a gold ETF or Barron's gold, that gives you either a direct access to gold or just access to gold reserves. So look, even if you buy the Russian ruble, it's now linked to gold. That's also exposure to gold. But what I'm trying to say is this: try to broaden and do your research before you just invest, right? That gold ETF is now over. People know it now. So the price you buy might be overinflated pure demand and not because of the intrinsic value of the actual gold that they have. That's what I'm telling you. Much excellent, bro. Thanks. Hey, Jerry, access to finance. What's going on, Jerry? What's happening?
Hi, Kalu. Good evening. Can you hear me?
I can hear you very well.
Kalu, thank you so much for everything. When I'm rounding it up, I have to talk about your book. I know you are trying to avoid, marketing your book here, but let me start with this. If you're going to enjoy what Kalu is saying, please read that book. My last trip, I had 6 hours on the flight. It's always beside me. I'm an author myself, but I can recommend that book any day, anytime, anywhere in the world. I can tell you that. So please, don't be afraid to talk about that book. It is loaded. So I'll just quickly to add something and also to just explain a few things further. The first thing is that you have talked a lot about Ponzi scheme this year, and you have warned a lot of people. But, when you had a period of recession like this and financial challenges across the world, Ponzi scheme and fake investment tend to rise. I think it's important when we review 2022 investment and looking forward to 2023 that you also re-emphasize that Ponzi scheme will come back. And people need to watch those two good to hear investments. It is important because they can erode capital. So as we look into 2023, it's important that we recognize somebody coming with a return of 50%, 100%, and the like. So it's something, we all just point out 1, 2, 3 and say, these are the things you will see when this investment is a no-go area for the Ponzi scheme. Secondly, I also try to add my voice to the lady that was talking about losing her 400K. That is very painful, but she shouldn't give up. You said something there is critical. A lot of people want to invest. When you're going into 2023, maybe you're struggling with finances and income is low. If you recall and find out this year, a lot of people travel, they left their job and they are shortage. So I advise people who want to invest, who don't really have a job or struggling, to do a research on the industries that are losing a lot of their staff and the kind of staff they are losing. So you know that with technology, product management, healthcare, those areas get the skill. If you have the skill there, brush up that skill, you can use that to increase your earnings. And based on that earnings, you can save from the saving, which is the first income that Carl was talking about. Then you can move to the second income by using the generating investment. It's important we do that and can also increase our earnings for 2023. Of course, another thing I want to say, for those that are self-employed or use business who want to invest, in everything we're doing for 2023, it is important to look out. I mean, we've talked about the emergency fund, we've talked about the second thing in terms of the life insurance, we've talked about the retirement fund and going with exchange traded fund. One thing it's important to look at your health, critical for investing, for financial, because the health can actually erode everything they are doing. It's important you look out for health insurance. No matter how small, please get a health insurance. If your company does not have, our self-employed for your business person, it is important for you. So these are just the things I want to add. And finally, you rush into credit. Learn a lot before you take out credit. It's very good that you take credit, but and those are the things I want to add. At the end, please try and get credit. Very, very informative. Thank you very much, Carl.
Thanks.
Thanks.
Thank you so much for the kind words. I appreciate you. Okay, so I get you. Yeah. If you can't get the book, book send me to the students. I give you this. I want to educate. That book is 22 years of my experience in Nigeria, America, private banking, corporate banking, retail, pensions, investing, private equity. It's all in that book. We talk about entrepreneurship, investing, budgeting, cryptocurrencies. We do everything. I try to do everything in that book. I tried. I had to reduce the size just to go past. So, guys, let me just mention one thing that Jerry is talking about, right? On Ponzi schemes. I don't think I've spent so much time on Ponzi schemes. I warn people still invest because there's poverty, and Ponzi schemes, people want to get rich quick. There's also the fact that this is something I found out, right? People know it's a Ponzi, but the idea is that people say if I go in early, I can make my money before the thing crashes. So it's crazy to me, but that people still do this, right? There's a Ponzi scheme. I warn people about NBA Forex over and over. Many people came to my timeline. Oh, they're in school. Oh, they're regulated by SEC. It's crashed. I warned about MMM. It's crashed. Right now, let me give you since on the space. Omega Pro. It's a Ponzi scheme. Omega Pro. International. Was it? International Private Capital. Is it IPC? What's the name exactly? If someone knows the name, just is it?
I can't hear anybody, please.
So sorry, Jerry. So sorry, guys. I think I was on mute, right? Jerry, I appreciate your comments about the book. I do appreciate it, right? Guys, if you can get the book, it's my 22 years investment. Working in private equity, investment banking, corporate finance, stockbroking, all that stuff, just my experience, all that. That's what I'm trying to put in the book for you guys 2 chapters, 252 pages of just real life experience. If you look at the book, it gives you all I'm saying, right? And you can have it all. I also have all the articles on the book are in articles I've written, so you can also search for them. I try to make it very simple for you to follow. But let's talk about Ponzi schemes. Folks are still doing Ponzi schemes because they want to get rich. There's this idea that to a Ponzi, you can jump and you can make. That's wrong, right? People invest in Ponzi because they don't know, but some also invest because they know, but believe that they can make money before the Ponzi crashes, right? So let me just help out again here. Let me quote one Ponzi out there. Omega Pro. That's a Ponzi. I'm saying it openly so they can sue me. Omega Pro is a Ponzi scheme. If you have money on Omega Pro, it will eventually crash. It will cry. IPC, what's the international IPC capital or something like that? That's a Ponzi scheme. It's already crashing. It's going to crash. You lose your money. I warned about Forex. Many of you who are arguing with me on TL, it's crashed. I warned about NMM. It's crashed. It's not hard to see Ponzi. Ponzi is like porn. When you see porn, you can't define what porn is. When you see porn, it's porn. Same thing with a Ponzi scheme. Well, I'll help you guys out here. If somebody's offering you, if you see the terms investment and you see the term guaranteed return, that's fraud, right? Any investment, or specifically trading, someone tells you, I will trade and I will give you guaranteed return. That is the fraudulent statement. You should not go near that investment at all. Trading and guaranteed returns is a fraudulent statement. Any asset class, currencies, shares, bonds, crypto, what you want to trade and I guarantee you return, that is fraudulent. That's what Mr. Benny Madoff was doing. Benny Madoff was giving people guaranteed returns on trade and so on. So if you see high returns higher than the risk-free rate in Nigeria, the risk-free rate in Nigeria right now is about 15%. So it's offering you 50%. You want to ask yourself, what are they doing with that money they're taking from you? Why are they taking money from you? Why can't they just put money from the bank and go invest in what they're asking you to invest in? Why won't you give them money to invest? If they're making 50%, they're investing in what they had already. So high returns, promised returns are a red flag. If someone promises you a return, the person is offering you a bond. If the person is offering you a bond, then where is the sinking fund set up to repay? So if someone says, hey, I'm going to give you this return, okay, where's the fund that you use to pay? Where's the fund? Ask those questions. You have a sinking fund, where is it? Where's your trust? Also, regulation, are they regulated by SEC? CAC registration doesn't mean anything in investment. My Gatesman can have a CAC registration for any company he wants, but SEC has got to regulate not just the company, but offer Securities and Exchange Commission. So if it's not registered by SEC and they are setting you for public security, do not do it. It doesn't mean if it's registered by SEC. It doesn't mean if it's registered by SEC that they can. It's not going to fail. No, but at least you start getting to SEC out as without separation. And last one, guys, please don't believe all this is insured. The insurance companies are not insuring the contract. There is no insurance for trading. There is no insurance for gambling. What the insurance companies are insuring is the assets of those unfortunate friends, not your investment. So they think you are insured. It's not true. Make sure you ask the question, what is being insured? There is no insurance that insures when you are trading and you make a loss. Those agricultural buildings have insured the farm building, but the farm building is being paid to them, not to you, the investor. So please ask questions. I always have a starting offer. If someone makes you an offer, securities offer, send it to me via DM and say this. Don't ask me what about, what if. Send me the exact offer they send to my team. I will tell you this is nonsense. By the way, starting offer. So you don't have to say, I'll help you out. Don't send me, is this company good? Is that company good? No. Send me the exact offer they made to me. Just do a screenshot, send me. Say, what about? Just a question mark. I'll answer it, right? Let's get Jeff. Jeff, I think it's called Jeff. Jeff, what's up? Jeff Spirit, let's take the part from Mr. John. Dolapo, the Nigerian Mr. Go ahead, sir.
All right. Good evening, Carl.
Hey, what's up, man?
I'm all right. And you?
I'm doing very, very well.
I appreciate you for your first time on this session. I've been following you right from, I think, the last month when you tweeted something about the number of barrels that you export from here and all that. But I think now I'll just have to leave the Nigerian topic for another day. I would like to comment on what you just finished talking about. Talking about the what's it called? The Ponzi scheme. About last year, 2 years ago, there was this, I don't know if you know about the VGC, voter, I can't remember the name. They were offering, I think, about, was it 25% return on investment? It's just all these companies that just take your phone and they just assure you of a guaranteed return. Well, what I would just want to say is people should always try to disregard all of those things because either you like it, you'll keep kind of training and you kind of developing and modernizing their mode of operation that entice people to commit to them. So I just want to say that people should always try to disregard them. So now, my question is, please, are you there?
Yes.
Yeah, all right. Someone talked earlier about mint coins. Presently, I'm in the UK. So I would just like to know further. I don't know if she's still here. And if she's not, if you have any idea about it, you can just say one or two things about it, maybe how to go about it and bring this profit and how to really get into it. That's one. Then another thing I would like to know is between stock and bond. They have kind of inverse relationship. I think I'm right.
Yeah, go ahead. Ask your question.
All right. So well, I would like to, with 2023 review, I would like to have your opinion about it as to which of them to invest. Take for example, when you're talking about stock, it's kind of dependent on the profit or the profit of the company. And in a year whereby the company doesn't make such huge profits, to say, your return on investment or let's say your dividends will be kind of limited or almost not guaranteed. So with that in view, what would you say about it? What would you have advised? Which of them to go for? Is it stock or bond? And another thing is talking about the index fund, like we have in UK. I think the index for UK is FTSE 100. So now, with that, what would you advise? Now, okay, does it mean that if I'm buying or investing in the index fund, does it mean I'm buying stock 100 companies listed under FTSE 100? That's all I would like to know. Thank you.
Okay, so good questions. Let me see if I can answer them real quick for you, right? So she's talking about investing in coins. So she buys these rare coins, right? And she sort of like buys them. Those are what we call alternative investments. What you're buying like artwork, you're buying like right? To buy something that value is going to be held up because people want it, right? The reason why those quote unquote good investments are because they are not correlated to normal asset classes, meaning that even if there's a recession or there's inflation, it doesn't really affect the price of the painting. If Picasso is Picasso, if inflation is going up or down, Picasso does not care. If you want to sell your Picasso tomorrow, there will be someone that wants to buy Picasso. Same with this coin. Remember, these coins are produced, they get valuable when they are scarce. So the less that is produced, then the better they are. So if you look at the coins that sell the most, these are coins that were produced in say 1920s, and maybe they had a mistake and were discarded. They now become very valuable today because they are very pure. So it's like buying stamps. The stamp is rare, the stamp has value. Or buying an expensive handbag, or buy an expensive record player, and you just keep the bag. That's what it is called buying, or buying wine that you never climate control place. All those are good if you can afford them and if you understand that. So it's all about understanding the market, do your research. And I would say do 1, 2%. It's not bad. Ladies' handbags now, if you have a belt handbag, that's an asset. Look at a handbag. If you have a good watch, a Rolex watch, it's same to history. So you might want to just check it out and see, can I do this and what should I do? Or coins are very popular. Yeah, to go do your research. We don't have any value. Silver coins, gold coins, we're also buying the silver, and exchange of silver of $100 later or support right? Then you talked about stocks and bonds. So when I started off, it was very clear, right? There's no good investment, there's no bad investment. Stocks are not better than bonds are not better than stocks. What it is that stocks behave differently in different situations. What we have seen, I share this space, I share the graph of the guy that invested $1 from 1926, the guy that invested in bonds as well from 1926. So if you went to the US market and you invested, you bought a share in 1926, you used $1 to buy one share in 1926. Today that share will be worth $14,000. But if you bought bonds, that bond will be worth $280. Because held cash is going to be worth $21. That's from 1926. It's the US market data this chart. Does it mean that stocks are better than bonds? It simply means that stocks have performed better than bonds, but it is better. It means that if you are looking for this objective of growth, you want it to be in stocks. If you're looking for the objective of defense, income, you want to be in bonds. I would not advise a 70-year-old man to buy shares because I want to get 40,000. So you've got to go back and ask yourself, what do you want to achieve? If your objective is income, you are buying bonds, irrespective of the return. Because you can't buy equities, the whole money can go, and you are worse off. If you are a younger person, has a longer time to invest, and can absorb volatility in returns, then equities are for you. So the question in 2023, and I think this we had also another space earlier, if you believe Nigeria is going to grow, the economy of Nigeria, then you're looking at the equities. If you think the economy of Nigeria is going to be a bit wobbly and stagnant, you might be looking more at bonds. Doesn't mean 100% equity, 100% bonds, but you want to build a portfolio that is overweight. You might watch it. So if I believe that I'm not sure this economy, I just want to hide myself, I'll just wait for things to happen. I'll just buy bonds and just wait, right? If I think that the economy will be boom, there's going to be investment, the GDP will double, I want to buy into that growth of the economy. Hence, I am buying equities. So I'm not giving you a recommendation, but I'm telling you how you want to look at the market. There's always a rotation from risk to risk off. Right now in America, the sentiment is risk off. People don't take risk, they are scared of the recession. But once the money flows to bonds, if people think they're more comfortable, it goes back. So it's that rotation of the money that moves prices up and down. So that's the question of stocks and bonds, and also that's the question of coin trading. That was here, right?
Right now, you've not talked about the index fund.
Yeah, index funds are basically a way for you to buy. I use the example of the telephone book. If I go to the Nigerian stock market, right, and they put all the stocks in the book, the index of the stocks in that market. If I buy all the stocks in that book, I bought the index. So by just buying one, I bought everything. So I like them because this is a way for you to diversify at a cheaper price, buy a large amount of money. So if I was going to buy US stocks, I would first of all buy the index before I buy the sector, before I then buy the individual stocks. That means I'm looking at maybe VT and buying all the stocks in the world, maybe VTI and buying all the stocks in America. And I can get particular and say, okay, I want to only buy technology stocks in the US, and I go buy the ETF for tech stocks in the US. Or I can say I want to only buy property in the US that pay dividends, and I go and buy that particular investment that pays dividends in that country. So it's what I'm doing. My objective drives where I put the money, and ETFs allow me to invest cheaper, right, with the ETF. That's simply what I'm going to do. So does that help me come back on that question? So,
Yeah, that's all right. Thank you very much. I appreciate it.
great. And I think so many comments on health insurance. I always said insurance for life. Also try, like I said, also try to buy health insurance because that protects you not just to lose your life, but if you are assisted, health insurance kicks in. So always add that health to life insurance, like I said, right? Onyeka, Ujebe Onyeka Chi. On the floor, sir. Go ahead.
Yeah, good evening, sir. I really appreciate this. I've learned quite a lot about the question. I want to ask you the question: how can someone have a direct contact with you? That's number one. And number two, what is the real estate investment like? What is your projection for real estate investment in Lagos State for 2020? Thank you, sir.
Yeah, so if you want to contact me, I'm on Twitter, right? We're talking. You're already speaking to me. So just remember, guys, I'm a licensed guy, so I can't give advice. If you ask me on DM, I can't give you advice just because of my licensing, right? I can give you broad. We can talk broad. Like I'm never going to tell you go buy this. I'm never going to tell you this is going to happen. That's going to happen. Just keep that in mind, right? So to your next question about real estate, 2023 is going to be a year of we're going to have a new president, right? And that new president has got to create jobs, has got to invest. So all three guys, three entrepreneurs are going to do a lot of spending, and housing is just one way to invest. I'm disappointed that we haven't really tapped pension funds, unemployment, and housing. We haven't connected all three to create millions of jobs and create an ecosystem. Perhaps the next president will get it and will do it. So it depends on the kind of houses they want to build in Lagos. If you start building this 4-bedroom duplex in Lagos, you're wasting your time. What Lagos needs is this high rise. It's like 2004. We need to build 1,004 in Lagos every year for the next 10 years. If you do that, cement complex prices go up, iron rods, paint, nails, labor. Look at all the shares we are quoting now. When we just said it's cement, paint, aluminum roofing, all those prices go up, and most of these companies are quoted, or they are companies that supply those companies that are quoted, or they are banks that are quoted that are going to drive this. So it depends on how the new president will build up that's in Lagos. We already know Lagos is quote unquote an island, so the house prices in Lagos, the land prices in Lagos are going to keep on going higher and higher simply because of the land supply. So a house in Lekki or a land in Lekki, right? The price or the value of that land is just going to keep on going up because of inflation and demand. We know that already. The problem in investing in Lagos is the yield, not the return. If I take $1 million, which is let's just convert $1 million to say 500 million naira. If I take 500 million naira and I buy land in Lekki, right? How much would I? Let's say I build homes, have those homes. How much would I rent that house out at? Can I? If I build a home, let's make it easy. If I build a home with 100 million, what's the rent in Lekki? Can I charge 10 million naira rent for that house? There are other houses. Why would I get 10 million naira rent? Can I charge 5 million? So if I charge 10 million naira rent, I'm making 10% on that investment. That's the yield, 10%. I can take that same 100 million naira and buy federal government bonds and make 14%. So you see already, yield on investing in real estate in Lagos, especially because expensive land, is very low. People confuse the returns to the yield, right? The yield is very low because it costs you a lot to build in Lagos. You got to buy the land first. But if I took that same 100 million naira and I went to Ibadan, I would not spend 100 million. I would get lower rent, but it's cost me less to build. So my yield in Ibadan or Jos or Kogi is lower than, or is higher than my yield in Lagos because I'm not spending as much in Lagos than I spend in Ibadan. I was in the other way around. So what that means tells you is this: if you want to invest in Lagos, be very careful. When you buy the property, you've made the profit. So if you buy expensive, you are never going to make a return unless that's going to be your home. In which case, you're going to make the return. You don't pay rent. But if you're buying land to rent out or to build a house and rent it out, I think that right now is very, very tall order. What I've seen many people do in Nigeria now, and in Nigeria, is to convert their homes into short let. So they build the same house, but it's on short let. You can come and stay for 1 week, 2 weeks. So they are coming around that same rental twice. So instead of making 1 million rent, they are making 2 million rent on the same capital investment. So their yield is getting better. So in terms of resident Lagos, look at the yield, not the asset. Because the asset is immaterial. Right? If you own a home in that's worth $1 million and you can't buy a gallon like a Sarah, then what's the point? So you are looking at liquidity as well. Liquidity allows you to take advantage in Nigeria of opportunities that. So did I answer you on the inside there?
Yes, sir. Yes, sir.
All right, look at yield. The summary is look at yield, not just return. Look at the yield. Yield is not return. Dividend is not dividend yield. Dividend yield is not just the dividend. Look at the dividend yield. All right, let's look at Gabriel. Gabriel? Let's get Mr. I am Eric. Yes, I can hear you. Yeah, go ahead.
Thank you very much, Kalu. I've been wowed by learning from you this evening.
Thank you, sir.
First of all, I would like to get your book. I'm in the oil and gas sector. Where I work, we have like 3 categories. We have the employee, we have the labor contract, then we have the service contract. So I fall under the service contract. And in the service contract, we don't have what is called pension fund. The labor, they have the pension. The employee, they have the pension scheme. But with the service contract, we don't have such advantage. We are paid, everything is lumped into our daily pay. So how do we take advantage of this pension? Because at the end of the day, when you stop working, you don't have anything. It's only what you do to save. That's if you are going to save it. That's what you have. Like we said, some guys that are just laid off, that they are already 60, that you don't really have now. Once you are 60, you are laid off. Without pension, without pay off, nothing whatsoever. So what advice do you have for people like us? We can invest so that at the end of the day, when we retire, we have something more back to.
Great question, Gabriel. I love that question. I mean, that question, we can extend that question to say, what if you're a gig worker? You don't have a 9 to 5. You don't get salary at the end of the month. You might get 1 million in January. You don't get anything again till June. Then you get 10 million in June. Then you get till September. How do those guys? That's a good question. I mean, that's a use specifically, right? The Pension Reform Act allows self-employment. You can do it and register as a self-employed guy. Let me drop their name for you. Awapa. That's at the home. AWAPH. Awapa. Right? They do this informal sector enrollment into the pension funds in like pension funds in Nigeria. So what you can do is you can pretend that you are working and just pay your 80% or 50% directly. So you just open your account, put yourself as an employer, employ yourself, then pay your pension. You pay your employer, your account up and running, right? So you can do that for yourself according to the eventually come back. But even if we're talking about investing as a whole, what we want to do is to try to estimate if you make annually 10 million, maybe it comes just in January, divide it into 12 or so and make your payments monthly. So try to have a set schedule to put on your side. Either you invest when you get money. So you say, once money comes to my hand, I take out 10%, I put it in my investment account and I invest that 10%. Or you say, every month I will just invest the money 10%, January, February, March. You want to have a set way you want to do it. Either you say, once I get money, I invest. So if I get my gig, $10, I take 10%, I put my investment in those two. Or every month, I will take X amount of money and invest irrespective of what happens. Anyone is what we're looking for is the consistency of making those daily investments. Don't invest today and say, I'm looking for it tomorrow. Make sure you are consistent. Either you invest 10% or every time you get it, 10% just like example, you can do 5, you can do 1. Either you invest when you get it or you invest on the section, but you want to be consistent about how you are investing. You want to build up the way investment works. If you open up the equation on how we pay interest, it is raised over time. The longer you invest, the more money you get. Investment is raised over time. Compounding is a mathematical formula that takes time into cognizance, not interest. It is raised over time. That's why Albert Einstein called compound investing the eighth wonder of the world. It is over time. So the longer you invest in compound, the more money you make. If you invest when you are older, you don't make as much money when you are younger because your older years, you have less time to compound. So what I'm saying is that if you investment is 20 years old, at the same interest rate as you, and you invest twice what that kid is investing, but you have shorter time to compound. The kid that is investing less than you, same interest rate, tends to make more money than you on a return basis because you have no time to compound. You cannot compound in your money. It's like taking the money and putting it in your room. You make more money than the guy in the bank. Your 1 billion in your room does not generate the returns that my 1,000 in the bank is generating. Does that make sense? Your 1 million naira in your house is not generating the same return that my 1,000 in the bank is generating. Does that make sense?
Absolutely.
Yeah, so look for them Awaba at AWAH Nigeria. Awaba, our money, our Nigeria. They do this informal, open an account with them, informal contributions. And
Okay, I'll take that.
Super. Hey, you got your hand up. Mr. Famzi, you got your hand up. What's up? Did you have a comment to make or?
Well, basically, what I wanted to say, verification.
Okay.
I want to ask one. I know there are some of us here who are listening to this who basically earn 100,000 naira or even less in Nigeria, right? And considering the even living expenses and the inflation and everything, you can't even survive on the 100,000 naira or less in the country. What's your advice to these people with respect to investment?
The best investment they can make is to invest in themselves. So if you are earning the very low, just 2 days ago, we were talking about bank workers, what bank workers are in Nigeria. I was shocked. I don't look at that entry level amount. Bank workers, entry level, casual staff, some are earning less than 100,000, some earning less than 200,000. So it's to your question. How can a guy that works in the bank that is counting millions be making less than 2,000 naira in a month in Nigeria? I don't think that's right? So the best investment you can make as a poor, quote-unquote, poor earner is to invest in yourself, learn a skill. People say, I don't have money to eat. How do I learn a skill? But that's the only thing you can do, apart from complaining. Half of the total Nigeria has got the second largest group of IT professionals in Africa. Number one is South Africa. Two is Nigeria. This is what I saw from Google and the report together. In Nigeria's case, half of the trained IT folks in Nigeria, half of them are self-taught. They didn't go to university, they didn't go to school, they went online, learned and got a certification. So many guys in Lagos are just making lots of money in dollar terms, doing skills on Fiverr, just doing their IT skills, getting money. They didn't go to school. No one has a BSc coding. There's no BSc coding in Nigeria. So all the coders are all outside Nigeria university. They're all upskill. They take their money, they upskill. I mean, I get in Abuja. She was staying in a hotel in Abuja. She is a student in a school in the east. She comes to Abuja, and over the weekend, she has this laptop. She does editing for Nollywood. She gets the raw movies, and she goes to her hotel, and then she edit the movie. So she'll cut up the noise, all whatever. This guy's university. She does like maybe 3 of those a weekend. She just sits there and does all that stuff. I actually paid for herself to go to school, paid for her kids also to go to school. She learned that trade. Someone showed her in school. She went, learned it, how to do it. So those guys will record videos. She give it to her. She remove all that background noise, do the cutting, give them back their CD. So upskill. Not, I wouldn't say go and invest in shares or stocks. I would still save. If you don't save, you can't invest. What is saving? Saving means you don't spend everything. So once you don't spend everything you make, go and learn the skill. If you learn the skill, then you can get more income. There's no other way now. You can't complain. So if you can't complain, go do something about it. Try and upskill. Don't try to invest in crypto to make more money. No, invest in your skill. Learn your skill. Grow your income. I think it's the fastest way you can go about it. Yeah.
Okay.
Thank you. Yeah. Okay, so I've got yeah, go ahead. So Saint, just real quick. Saint _ Baba, how are you doing, sir? Saint _ Baba, you've got the floor, good, sir. Oh, you got audio. Your audio is poor. Could you just fix that and call? Give me a hands up when you fix your audio. Yeah, go ahead. Yes, sir. Sorry about that. Fix your audio. Hey, Mr. I am Eri Oluwa. What's up, man?
Hello.
Okay. Oluwa, hold on. Saint B, I can hear you. Go ahead.
Okay, good evening, sir.
How you doing?
Fine, sir. This is my business first time. I just have 2 questions to ask. Hello, are you hearing me?
Yes, I can. Go ahead.
Okay. My first question is, I joined it and I heard when you were talking to a guy about some ETF and some other things that the guy can do. Actually, I've got the knowledge. But I could not get that 3 others that you spoke to the guy earlier before joining because I overheard that. And I've even sent a message about that. And my second question is, now as a, let me say, a young investor coming to investing for 2023 with the minimum salary of 15K, how can I save, invest so that to make that 2023, to make my investment like grow, or how can I go about it? Which investment startup can I push into?
Yeah, let me take your second question first. So I think, and I'm just being respectful here, sir. Did you say 50,000 naira a month?
Yes, sir.
Yeah, I mean, bro, if you earn that amount of money, what I would say is try to go and learn a trade. Don't try to buy stock or something like that. Try to go and learn a trade. And what I mean, a trade can be anything. Go and learn from someone. Learn something that you can then increase that income to 100,000. Even if it's welding, even if it is how to fix AC, go and learn a trade, right? Or IT, learn that trade, then your income can go up. That's 100% return right there, and it's risk free, right? You just go to Lagos, look for something you think you have a passion for, and someone that can train you. Go and learn from them. So what I mean, learn from them. Either you pay them to teach you, or you go and work for them. You want to learn what they are doing, and you can then go and start doing it. It means go and going to write ICANN exam or going to join union to learn stuff, go and do something that will increase your income. Your number one job, like I want to go back to what I told the guy. Your number one task is to increase your income today. That's what you want to do, to increase your income. You don't want to save to invest, you want to save to invest in yourself. And saving is just you want to spend less. But that 50,000 you are struggling to even save because you're earning less than even if I convert. Do you understand my point, sir? Try to grow your income. That's the number one task in 2023, right? And let me just you alone. You can send me a DM. Just you can work on you and I. Just let's talk on DM, right? What I told that guy was that if you want to, the steps you must do before you invest. You must do this before you start to buy shares or stocks or crypto. Number one, you build your emergency fund, 3 to 6 months of your non-discretionary expense. So you must have like your piggy bank first. Number two, you want to buy life insurance if you have dependents. If you don't have dependents, you need to buy it. Number three, you want to save for retirement. But you say, these three things, I don't think you can do it because you don't have the income to be there to retirement or the life policy. Even the emergency fund will be hard for you because you have your income. So number one task is to grow that income. Does that make sense? Okay, so when we're done, send me a DM, we'll talk like we can work better. Just use that. Don't just you alone, yeah? So yeah, we'll talk online, yeah? All right. Thank you. I am Eri Olua. Go ahead.
Good evening, Mr. Kalu. Thank you so much for the wonderful session. Thank you so much. It's been wonderful. I celebrate you, even though in Africa we rarely celebrate people when they are alive. I do celebrate you. Thank you. And good evening to everyone. I want you to please emphasize the importance of education and the issue of crypto. Because if you notice, even the person, one of the persons that spoke earlier on spoke about money in the forest in crypto. I want you to please emphasize the importance of financial education and people actually taking their time to learn forex and crypto on their own. If they so like it that they want to invest in it, I think it's better for them to know. So if you can please speak about it. And also, I want to challenge people to please buy it. It's a wonderful book. Thank you.
Okay, so let me meet you. I think it's over. Okay, so let's talk about this. Like you rightly said, if you don't know something, right, you can't participate. Right now in the world, Canada, some states in the US, some states in the US are now teaching their kids about how to invest. And we're talking about very basic things: compound interest, budgeting, right? If you don't know what compound interest is, a child, do you know what that does for you? I have a friend in the US, right? Look at what he did. His son is 16 years old. His son, he employed his son to cut his own grass, his own house. So he was a company. He employed his son, who is 16 years old. His son's job is to cut the grass in his house and, of course, the neighbor's house. He pays the son a salary. So his son gets a paycheck. His son gets a paycheck. The guy takes 100% of the paycheck and opened up a retirement account with a 16-year-old boy, an IRA account. So he puts his son's paycheck into that IRA account. So this boy is 16 years old. That is paying him a salary that is like a salary. But he's putting it in investing for him. What's the dad doing? The dad is not paying taxes on that investment because any money he puts in that IRA, he doesn't pay taxes. So he's claiming also his salary as an expense on his business life. So he gets expense, he doesn't pay taxes. His son does not pay taxes because he's into an IRA. That boy is going to grow up to be 40. That account is still 60. This simple that his father has set him up for life more than many American kids because he's going to have a start of life with capital. All American kids start doing a job. This is just financial knowledge. That knows by doing this thing, they will have the boy. And there are other hacks in Nigeria as well. I told you guys one time, if you have a company, employ your wife, employ your kids under your company name, pay them a salary, and give them benefits. It's illegal. That's what the Nigerian law says. Employ your wife, pay her salary, employ your children, pay them salary. Someone says, my child is a kid. Okay, your kid can do advertisement now. Take a picture of your child, put it on your annual report. So your child is the model. Pay him 5,000 naira as modeling fee. Pay your son the choice to make coffee. The law is the law. I'm not giving you what the law says. The money you put, you avoid paying tax on that. You pay your wife, your child. So you have allowance. You open up an RSA for your child. Same thing you're doing. Same thing if you buy life insurance on your wife, buy health insurance for your wife, avoiding paying taxes as well. So you got to understand how money works, take advantage of money. You can't go and watch football, even football rules. So if you don't understand money, how money talks and how money moves, you can't make money. You have to understand money to then know how to invest. So education is very, very important. And all of this crypto thing. Let's talk about crypto. Let's talk about currency trading in particular. Stuff. Oh, I want to invest in currency. It's not fake. It's okay. The profit is this. What is the profit on one trade on currency? What's the profit? Do you, in percentage terms, what's the profit you're making? If I know currency is if you invest $1,000, you make 2,000. No, you don't make 2,000. You are making a peep or 2 peeps or 3 peeps or whatever, which means that you need a humongous amount of money to make money currency. So what's this currency people are talking about? Let's go and learn. If you learn the currency trading and you want to invest, what exactly are you going to make if you leverage or use a huge amount of currency, trade currency? So what's this currency thing? That you make 25% of 100 is what? That's capital. If you make 50% of $10, what's that? But if I make 1% of 1 billion, what's that? Skill is how you make money in currency trading. If you don't have skill, then you're not there. Go to something else. Crypto trading, I don't really know what that is. Gambling. But they cannot make it sound exotic. So they say it's crypto. You are gambling on security. There's nothing wrong with that. Most people that trade stocks are also gambling. Stock trading, money trading, it's all. You are taking a bet on future repercussions. You are taking a position and get it. The problem is that with crypto, you are trying to trade the market. You know what's going on. Look at FTX. You know it now. You want to get the hindsight. But back then, we didn't guess what you know. So be careful, right? And if you don't have the money, speak to an advisor and know exactly what you want to do. Don't just dive in because you don't see this money. Currency. Be very, very clear what you do for risk protection. The financial markets are the only market I have seen where you can go into and say, I only want to lose 5%. So you can actually go to the financial markets and say, I only want to lose 5%. And whatever the market does, you lose 5%. You can buy a stock gap or you can get a stock price. You can buy an option to reduce your loss. But if you don't do this, then why are you trading? So knowledge is what helps you make it. If you don't know, you can make money. So thanks again. Wow, guys got to stop with that. We're at 1:10. We're about 10 to find this down. Michael, what's up with you? You've been hopping in and out. M-Big, I'm not calling him. Michael M. Go ahead, sir. Michael?
Yeah. So my question is about investing in a local business and investing in stocks. What are the returns? Like, for example, I have a friend who invested in an Indomie business, so it's 5,000. I invested. He made 40% of the money just once. So I'm trying to do which one is more profitable? Investing in local businesses like commodities and all that. During this kind of more profitable.
Michael, that's a great question, right? If I had to invest in the business or I had to invest in the securities, that's great. Which one makes me profit? The richest folks in the world all own their businesses. Richest guys. Venture capital is the highest return of any asset class. So it means if I invest in the business is profitable and make more money. So venture capital has the highest returns. It's higher than everything, right? The problem is that business can fail. So it's high risk. Your friend has an innovative business, the business can fail tomorrow. Asthma can come, or Kai can come to and pack everything else, and it's all done. But when you buy, say, Dangote shares, yes, you don't get the returns of Dangote itself, but at least you're buying into a company, blah, blah, blah. So it has to do more with the amount of risk. Because there's more volatility in venture capital, they make a lot of money. So if I invested in Google, I'm a billionaire. But if I invested in all those other companies that crashed, my money has. So investing in venture capital or your business has more return, right, than investing in the shit business. But it also carries more risk. And you will not have time. Remember, if I want to trade, someone asked me a question about export. If I want to do export, I don't know anything about export. I can go and export yam to EU and reject it. But if I invest in an export, I will not make 100% gain, but I invested because the guy is doing it and I can make a return. So the answer is yes, you get a high return, but with that high return comes your knowledge and the expertise on the business. Not everybody is going to be an entrepreneur. To be an entrepreneur, you need some particular skills, visioning, managing teams, all that is very, very important. If you don't have that, you're going to be in trouble. So it's left to you. If you want, I would say, don't leave your day job, invest first, learn the tricks before you go out and entrepreneur. Make sense?
Yeah, makes sense. Thank you very much. Yeah, one last question. It's regarding crypto. It's regarding crypto, like the crypto market. For example, let's talk about Ethereum. For example, Ethereum is an ecosystem of decentralized products. So there are different products launched in Ethereum, right? Wouldn't it be safe to put something very small, very tiny? I'm not talking about the high-risk products. I'm talking about something that you can start to do. So there are different media, decentralized media, decentralized, entertainment stuff that are going on right now. Wouldn't it be safe to just have just a tiny portion of the investment that just, we cut it down. It shouldn't be safe to put every time that since it's something decentralized, it's not even Bitcoin.
I mean, I get it. Michael,
last question.
Yeah, I get the question. Yeah, especially talk why there's nothing wrong with that. I, for instance, always have like 1% that I use. I call it my bets money. That's my money I take bets. I don't think if I use that money, I know I'm going to lose it. I don't care, right? I'm trying to invest in something that can just test out the market or something. You can do that. There's nothing wrong with that. There's nothing wrong with that. So,
thank you very much.
So Michael, Michael, to answer it is right. There's nothing wrong with that. Just don't justify that you are investing because of the centralized exchange. No, if you say I want to invest, I think there's and I'm taking a bet today. There's nothing wrong with that at all. Know how much you can. If you're putting money in, it's not that you think that if you lose, it won't affect your portfolio. You can put it in and then see what's going to happen, right? And then you know that's exactly what you're doing. But it's not like, oh, I'm investing because it's decentralized. What does decentralized mean? It doesn't mean anything. What does white people mean? It doesn't mean anything. But you can take a bet on an emerging tech that sounds silly. But later, you can do that. Don't tell me that. Just keep it very, very small. Exactly what you're doing. Know your pattern, right? All right, thanks.
Thank you so much.
Let's get Ibekwe. Ibekwe? Ibekwe?
Hello.
Yeah, go ahead.
Yeah, Carlo. Can you hear me? Hello, can you hear me?
Go ahead, sir. Ebeka, go ahead, go to the floor.
Yeah, good evening.
Yeah, go ahead, sir.
Okay, so I've been following you for a while now, and I've been carefully listening to your section. So, for me, I have been exposed to the ecosystem of investment right from after the university days. I'm talking about 2007 and beyond. So I've been able to invest in so long because at the time it was all about buying the shares, the bank doing IPO, a whole lot of companies at the IPOs, and it was more like in Nigeria at those times. I was actually investing a lot of my money. My salaries at the time, almost half of it was going to buying shares, trying to make sure that I have some footing for having some investment. Believe you know what happened afterwards? The event of 2012 crashed everything. As I talk to you, are you there?
Yes.
I invested over 1 million as I in shares, and thereafter I went to my stockbroker. I said, "Let me have my summary. What's left of me?" My statement was 60,000. It was heartbreaking, mind blowing. Thereon, I suspended anything that has to do with investing in shares and stocks and all of that. But then I didn't relent. For again, I mean, I got into the event of doing what they call trading, kind of forex. I got into the stuff. I invested my time in it. I never put my real money into it because it wasn't clear to me what was happening there. It was more like Calvin, like you said, the risk was so high. So that was that. And again, of course, I put some money there, and it was really cruising to me to the point of having $20,000 in my wallet, and it was good. And then just a trade wiped up everything. I have less than a Bitcoin in my wallet. I suspended everything about Bitcoin and all of that. So what I'm trying to say is that it's good to talk to people about getting into some of these things, get in there, do it and do this and do that. But from my experience, over 20 years trying to stop in trying to build portfolios, it really has not given me the confidence to say this is a good way to go. That is sharing my experience. I'm not going to ask you any question on this. My question to you now, I am an entrepreneur who has to the glory of God is on I have a projection on that every year we move up to 50% turnover of our investment, right, in our assets. So, but then what I do is money. I borrow from banks. I borrow from friends. I put money back from sales. I need money to make money. So now, what advice would you give to somebody in my situation? That because I need more money to do my business, how do I begin to think of investing? Where do I invest? The more money I put in my business, the more money I make. So it's a dilemma. Do I need to put money? Where do I invest in? Or do I keep on to grow my business to the point that it becomes billionaire business? That's one question. Then the second question is, you said something about real estate business in Lagos. The view is not as fantastic as combining some other cities that are not like probably Benin, Enugu, or whatever. The point is, I have friends who are in real estate business in Lagos. These guys get build in a year, they can build 20, 50 units of maybe 4 duplexes and sell. And they constantly tell me they make as high as invest about 700 million and make about 200 million in a year. So, can you say that the youth is low for that kind of real estate part of, that basic investment? So these are the two areas I want you to touch on my concerns. Thank you.
Yeah, thank you. If I don't answer, please make sure I was trying to write them down. First one, you invested in assets, in shares back then. So respectfully, I'm just going to say respectfully. Right? So if you buy the best black and white television company in the world, you lose your money because you're buying black and white television, which is not no one watches black and white television anymore. You get the point I'm making. Zenith Bank,
black and white.
Nobody uses black and white television anymore. So even if you buy the best black and white television, nobody will buy it. You get what I'm trying to say? Okay. Zenith Bank also sold their shares today. I think Zenith Bank, without getting them, I think they're pretty good stock. Dividend yield is high. The stock has been good. You know? So if you bought Zenith Bank shares back then, would you have made a loss today? I doubt it. The point I'm making is that it's the shares you bought, not that you bought shares as a problem. The shares that you bought.
If I'm telling you about these shares, I'm talking about Dangote, because Dangote Dancer ruled out IPO. I'm talking about First Bank. I'm talking about the Zenith Bank.
There's no way. I you didn't make a loss. If you bought Dangote, I think the shares made Nigeria stock market in the world. There's no way you lost on that. No way.
Okay, what I will do is this. I told you last time I checked my statement was about more than 5 years ago. Maybe I'll call this topic again to let me understand what my
also when you want to
lost interest, I didn't want to get involved again.
I got you. Hold on. I got you. So what I'm saying that when you want to check your balance, make sure you just solve that you can put in your bonuses that will give you your average prices. You simply carry your historical cost and adjust that historical cost for the results you have made on dividends and bonus. When you make a dividend and a bonus, it drops your purchase price, it drops your average cost. So when you look at your total return, it's actually doing better. So make sure you use an app that can do that for you to do a proper return on that portfolio annualized. Let your broker do that for you annualized, you'll get a different number. Because if you bought those blue chip stocks and you're quoting Dangote, First Bank had a bit of a problem, right? But if it's Dangote, since have done pretty well, right? Our sugar, they've done pretty well. Those are the two Nigeria in terms of capitalization. So I was surprised people lost on that. But do it. If you want to talk to me, let's talk, but let's come back, right? Your second question on running your business and running shares. I mean, Warren Buffett's business is buying shares, but his business is at Hathaway. Do you get the point I'm making? Your business is what generates revenues for you. You don't have to buy shares if you have a business. Nobody says you can't buy shares. Folks like us that buy shares are because we can't start a business. So we then invest in you that can start a business. So we invest in Tesla. I can build an electric. I don't know what a battery is, but I can invest in Elon Musk to build a Tesla. And I then get passive income of Elon Musk. So if you have a company where you are making returns on a profit, where you buy shares, invest in your company, but diversify away from your company as well. When you then invest in your company, that's your number. I give you guys 4 boxes: active income, number 2, passive income, number 3, non-discretionary income, number 4, discretionary income. The company that your own company is your active income. You have got to then make that money. When you make that revenue, when you pay yourself salary and dividends, diversify diversify away from your own company and buy your protection. You can buy bond, you can buy property. That's your diversification using the revenues from your business. So when you get money, you invest in your own business, then you take the returns from your own business, pay yourself and invest in passive income away from your business. Your business is separate from you. It's still investing your new retail. So like your business makes 100 naira profit. Out of that 100 naira profit, you pay yourself 10 naira. That 10 naira you pay yourself, you go and buy your property, you go and buy your shares on your name. But business can reinvest in 90 back into the business to grow that business to give you 15 naira tomorrow. So not from 10 to 15, next year to 20. At the point your business is always paying you 10, 20, or 40%. That is what you are investing in separate from your company, right? So you diversify the revenues of your that business model. So you are living your life using the revenues. You don't have to, nobody says go buy crypto. You have a source of income. My source of income is pure water. I sell pure water. I get money, right? I take my pure water and I buy like Coca-Cola. I buy a house. I buy a property from the revenues from my business. So I'm diversifying more passive income sources from that one source that I have. So I have a balanced view, right? That's what. But I'm using my reinvesting retained earnings to keep on growing the scale of business. Number one source of wealth for billionaires is their venture capital, their own business, not stocks. Buffett is rich not because he owns Coca-Cola, because he owns Berkshire Hathaway company. Right? Okay. Which one do we talk about? Then to talk about the Lagos houses, right? When I said the yield, what is yield? When we're talking about yield, yield is what you put in, what you made over what you put in. Let's say I buy land in Lagos for 1 billion, and I build a house for 1 billion. That's and I sell it for how much? 100%. So it's good because I sold it right for 3 billion. I'm talking about the returns. If you take that 2 billion and you rent a house, what's the return? What's the rent of 2 billion? Of 10%. Because the cost of the land, the cost of building that house in Lagos alone is very expensive. Lagos, Abuja, some parts of Port Harcourt, very expensive. And when you try to rent it out, you make a very, very low yield. That's what I'm talking about. Same with you might have to build a house and struggle to sell it. I saw a report that lots of luxury homes in Lagos were unoccupied. Luxury homes are unoccupied. I don't know what happens. So the rental prices as well is very. I'm not debating the value. The value is high. I'm not debating. I'm debating the returns on those properties. If you do that same amount of money and you bought low risk, I'm not listening you do. I'm comparing. Those blocks of development pay you more than the rental. That's what I'm saying. So I'm saying be careful about investing in property to make a return that's not inflational, but risk-free rate. All of them do with inflation. Government will not with inflation, but your own property return is not with inflation.
I get it now. I get it. What it means is that anybody buy land, building house, selling afterwards, actually in business. I'm not investing.
If that's your business, don't come. If that's your business, that's your business. You incorporate the company, you get that's business, right? I invest in you, I am an investor in the business. Then someone owns a company. I can buy company shares, I can buy Tesla shares, or someone owns Tesla. That person that owns Tesla is an investor. I can invest and buy Tesla as well. We are two different. He has shares that I do. That's why we also keep passive income from him. So then if you have a business right now that is paying you, okay, and you can do more in business, then why go buy someone else's shares? American companies or growth companies do not pay a dividend. So Tesla does not pay a dividend. Microsoft didn't pay a dividend for years. Growth companies like Google don't pay a dividend, right? Because they are investing the profit back into the business to grow the business. Same with you. If you have a business as returning you. Because in the end, you have to look at the yield of your business. Capital, you put in $1 million into your business, it returns 40%. That yield in your business is more than the government return, it's more than inflation, it's more than stocks, it's more than bonds. So why would you take money from your stocks? It doesn't make any sense. You can only invest into your business to get the 40%. And what you are paying yourself as your income from that business is what you need to go and buy the stocks that are giving you less yield because you are buying it to diversify. Goal now is not the return, but to diversify away from having just one income source, which is your business. Makes sense?
Yeah, it does.
All right. Excellent.
Yeah, it does.
All right. We've got all our DJ, we've got Giant Capital, all the guys. We're going to get everyone now, and then we'll just wind down. Giant Capital, hi.
Hi, good evening, Mr.
Hey, what's up?
Thanks for the space. I really like it. But I would like to get some clarity on this. In the context of the 21% inflation rate, which of this is better? The government, federal government of 16% or the rental party with the yield of 10%?
I compare yield to return. So the higher yield is that in terms of the I can if you are giving me, you are asking me to look at so it's always better. If you are talking about yield, so the answer is right there.
Okay.
Then again, let's now ask the second question. Should I invest because of yield? The answer is no. I should not invest because of yield. I invest based on my objectives. So if something of a higher yield does not mean I invest. If I invest in cocaine, the yield is higher than the yield of federal government bonds. Should I buy cocaine? No. If I invest in Tesla and the yield is higher than Coca-Cola, should I go invest in Tesla? No. I have to invest according to my objectives. Why am I investing? Is it to grow my capital? Capital appreciation? Is it to preserve my capital? Capital preservation? Is it to create a dividend income stream? Is it to hedge against the currency? If you get why you are investing, then it's expensive. I want to invest here because I want to do this. So you can't compare simply the yield of government bonds and the yield of equity. That will give you half the answer. You have to ask the second question: why are you investing? If it's a 60-year-old guy, whatever the yield of the property, that might be preferable to me because he can't take this. Makes sense.
So, yeah, makes sense. For instance, I'm trying to preserve my capital and also trying to make perspective of with the context of the 21% inflation rate, which would you suggest? Between the federal government bond and equity.
It depends on how long you are investing. So, again, same reason why. So equities do better when they have a long time to run. Bonds are more or less, you are investing in debt. So you are asking me to compare debt to equity. Debt is fixed income. Fixed. That means if I'm getting 10% coupon, I'm going to get 10% coupon. It cannot grow my principal. It can return principal to me with interest, but it can't grow my principal. Equities can grow my principal and can lose my principal. If I buy shares, I can make 100%, or I can make 0%. If I buy bonds, I can only make the 10% or whatever coupon is quoted. So there's no right. You have to compare on orange, right? You can't compare two asset classes unless you are doing the yield. But if you are doing the yield, that means you have agreed that you want to do income. Hence, you're looking for the higher income, right? So you can't compare two asset classes. But if you ask me, the bond, corporate bond, and the government, which one should I buy? I'll say, oh, buy this one because it has a higher yield and more volatility. But if you ask me, should I buy debt or equity? These are two different things. We can compare a car with color red. We have to compare like that. So the answer really has not to do with what you think is going to happen. If you think that the interest rate in the economy is going to go one benefit if it goes up? Bond, because it's a fixed income, right? So you can trade up. If you do short-term bond, you can trade up and make it a short-term return on fixed income. Equity, those companies have to borrow money to invest, which might be hard for them, so they might struggle. So there's no, you have to compare like for like. That makes sense.
Yeah, I understand.
Excellent. Thank you. Let's get straight. You're welcome. Trader Not Professor, how are you doing? What you know, guys? Trader Not Professor, what's up?
Good evening, Mr. Carl. Can you hear me? Okay, I actually picked the mic when people was speaking because I think I tweeted that I wanted to share an experience that I this position as well. So you did justice to what he's going to say, but I think I will keep my for this and I'll make it brief because it could also help other people as well. It's like these people who were asked me to tell us how to question because irrespective of their own to get into doing business, it's good to diversify because anytime something could happen to your business and you don't know. This was Mr. Carl said the other time about forex traders and making profits and all of that. See, I'm not going to be positive. I'm going to share your experience because I'm also a forex trader. At least I have a lot of experience. I had to get some money. I started some questions. Well, I cannot say friends that I'm doing well and all of that. So can you help us trade and all of that? What do you want? Can you offer us? So I made them an offer actually at the end of the day. And the truth is that what happens is that when someone tells you about forex and all of that and say you invest this amount that you're going to get a certain percentage, see the truth is that there's nothing like 70% in forex. I feel it is over a decade, there's nothing like 70%. I agree that was true. I know very well the time I made them that offer. Personally, sometimes I trade. There's no point I make less than let's say 50-80% of my profit. Sometimes I go as high as 100% a month. But you know what happens? When I make that offer, it brought another level of burden and responsibility to me. I don't feel more relaxed. And before you do it, I started making losses sometimes. And then at some point, I got negative. I almost lost myself. You can imagine, despite my years of experience, I almost lost myself. At some point, negative losses and all that, I got dead. I just about trading and income. Please run very far away from that. Even me as a trader, I will tell you that run very far away from it. It's better if you feel that person is so knowledgeable, you can tell the person to make you understand this or teach you trade for you for a fixed percentage. And also, the business you're doing, always diversify it. It helps a lot. I know when I got into using my savings, I had in crypto and all of that helped me at some point. So it helps a lot. Aside that, also diversify your real estate and lots of things. So Mr. Carlos is actually doing a lot of justice to the and thank you for Mr. Carlos for writing this. It's really educative. So I appreciate it.
Thank you. I appreciate that, sir. Yeah. Good point there. So let's just wind down. Willie was fired. Willie fired.
Yeah, yes, that's correct.
Ola, I'm coming to you, sir. Yeah, go ahead. Go ahead, sir.
All right. A brief one. Work in the power industry. I discovered that June of last year, my company RSP and it's how do I go about that?
Oh, very easy. Go and report them to PENCOM. It's big offense, right? If you report them to PENCOM, they're going to make them pay with interest. The law, so it's not an opinion. They have to pay more. That's 18%. You pay 8, they pay 10 by law. It's like them owe you salary. So you can just report them anonymously to PENCOM. PENCOM will investigate. They will pay back with what's called interest paid to. Just see if you can get someone to report them. Because debit you? Have they debited you?
Yes, deductions and everything.
So that's double wahala. So that's an easy one. I know where you work, and you work for a private company, or you work for like a public. Where do you work for private?
It's public and private. Government.
I would say go and report them. That means that's easy. Just go report them. See if you can do an anonymous report to get your statement first of all, and ensure that what you have is the latest. Just send a team to them and say these guys are debiting our salaries, but they have limited. Let me take care of it. Yeah. They actually have consultants that go around trying to find companies like this. And if you find a company like this, the bank companies and the commission. So I mean, yeah, try to report or try to with agents and report them so that I can come and take care of it for you. All right, nice one. All right, thank you. So, Ola, your last caller. Thank you for finding it there. Ola Malik 18. How you doing, sir? Go ahead, the last guy. Hello. All right, Ola. So guys, thank you so much for hanging out. We have spent 3 hours today on just reviewing our investments and our portfolio looking at 2023. I think we try to do investment analysis. I need to tell you where to go and buy. I want people to ask questions. I want people to ask questions. We try to best of our ability to answer. So thank you guys for hanging out with me. We're going to call it a day now. We're going to let you guys go enjoy the rest of your weekend. Tomorrow, we hope France wins and all that kind of stuff. Right, so guys, let you guys go get the book. Like I said, it's available on Amazon, on Roving Heights. Let's talk about your money. So my team there. Also, the book has got lots of free art. So you can go with my name, whether an article, you can pick it up. My whole thing is about educating you about money. I want you guys to get better at making money. I can't tell you go buy this, but I can tell you how to and what to work out. That's the book I'm going out for. So make sure you increase one key goal for you to increase your financial knowledge, right? The more you know, the more you are better. Money is, you have to study money. You can't say, I know about it. If you're feeling bad, you go to the doctor. If your tooth aches, you go to the dentist. Don't think you know about money. There are tax laws, there's where money operates. Always speak to the price, right? Any investments. All right, guys, thank you so much. God bless you. Take care. I'll see you guys maybe Monday or next Saturday. Have a good day.